Good morning, everybody. Welcome back to another episode of the Market Open. It is Friday, August 30th, 9 a.m. It is the last market open of August because this is the last trading day of August 2024 as we get into the September trading month. I just want to say that, like, the concept of time is so interesting, right? The concept of time, like my version of time and your version of time is different. It's kind of like the beauty is in the eye of the beholder. Like one conception of being on time might be different than the other person's conception of. Dude, we literally have Eastern, Western time zones, right? Like I think when we think of time, this is kind of what I want to start the show with. It has nothing to do with the actual world of investing that we're about to get into right now, but I just want to say time is such an interesting concept, and I've been fascinated with the enigmatic understanding of how we conceptualize the existential, ultimate, inevitable question of how do we realize what it means to be in time or on time in one part of the world, while in the other part of the world, there's different notions of how we understand the concept of time in and of itself. So that's just a little bit of a quote of the day to start the show when it comes to understanding what time is. Matt Money, time is an interesting concept. Is that why you're late? Dude, I'm gonna be great with my wife one day, dude. I'm gonna make a mistake and be like, babe, have you thought about the concept of time? I'm definitely going to be good one day with my wife. No, look, I overslept a little bit. It is what it is. I don't know what it was this morning, dude. Usually I'm up by like 6:30 every single day. Today I'm just like, I was tired, bro. I don't know what it was. I don't know if it was the like streaming this week. It was I guess it was a lot of streaming. I don't know, dude. I was tired, bro. We are unburdened by what has been. Yes, we are unburdened by the time that has been burdened. Yeah. So sorry, guys. I was tired. I don't know. I slept at like 11 p.m. I didn't really sleep that late. I just woke up. It was 8:30, and I was like, oh. And then I had to like get ready, go to the bathroom, all that stuff, and then ended up just starting late. Usually I wake up at 6:30. So, but we're here. We got a lot to talk about. We got a lot to go through. This is the last day officially of August. Time is a construct. That's what I should have said. Time is a social construct, dude. That's what I should. I'm gonna be good, dude. When I get married, I'm gonna be good. I will get out of things, or I will try to find a way to get out of things when I obviously mess up. Thank you, everybody, for being here. We got a lot to talk about. Well, we're joining, and as we're joining into the market open, one piece of news that starts off the show that I kind of forgot we had coming out today. I thought we had most of our macro data for today, but we actually had this come out this morning. Here you go, folks. Inflation's coming down. We had core PCE price index come out on Thursday, which was yesterday, not actual PCE inflation. Well, here it is. July PCE comes in at 2.5% below expectations of 2.6. Boom. Core PCE comes in at 2.6 below expectations of 2.7. Boom. The economy is booming while inflation is coming down. So there you go. This is what you needed to see for inflation to continue coming down. This is what we got. Very exciting to see that this is happening. Again, why do I say the economy is growing? If you missed the update yesterday, we had 3% revised GDP growth in Q2. That really matters because when you have 3% revised GDP growth in Q2, it means that we are getting inflation to come down while growth is not stalling. In fact, growth is accelerating. The argument over the past 7 months was if growth is too hot, then inflation is going to be too hot. That's changed. That's not happening. Growth is hot while inflation continues to come down, which is the soft landing scenario. And now if unemployment does not get into a horrible situation, we're going to be in a good spot. So that's what we got right now in the context of inflation. And it's not too bad because that's the PCE data that we wanted to see. So there we go. Let's see the broader markets. I haven't actually looked at the broader markets because I woke up late. So let's look at the markets and see where they're at and how this is going. S&P 500. Yeah, we're up slightly. 0.35%. Not bad. We'll talk. We have a lot to talk about, but yesterday we had a sell-off into the close, which was a little annoying, but I mean, it was kind of just like, it was whatever it was, right? NVIDIA, where's NVIDIA? NVIDIA tanked 6% by the end of the day, so it kind of took a little bit of the market down with it. But in general, NVIDIA up about 1%. In general, the market stopped caring a lot about NVIDIA yesterday for at least a certain amount of time. And we'll talk about why I think that was the case. But that's what we had. Palantir up 1.29%. There is a new article about Palantir. I don't know if you guys saw the Daily Palantir episode last night, but the Daily Palantir episode highlighted the new article that came out about Palantir's use in Ukraine. So we'll talk about that a little later as well. We'll also have TJ joining in about an hour, and we will go through options and all the stuff, all the moves we're making in the public portfolio. But outside of that, stocks look like they're up in the pre-market. Salesforce is up a little bit. Apple is up 0.3%. Microsoft up 0.6%. IWM up 0.47%. CrowdStrike up 1.76%. Again, I listened to the CrowdStrike's earnings call last night, and look, there may be some more issues in regards to customer delays and litigation, but they seem pretty excited for just like moving forward and continue to grow the top line business. So we'll see what happens. They have an event, I think it's called Falcon Con, that's coming up on September 18th. So they're probably gonna give a lot more detail and a little bit more insights into full year 2026 guidance. I expect growth to go from 30% ARR to maybe 25% worst case scenario. Probably 27% is where they come at. And maybe that hurts the stock a little bit, but I don't know if that, puts it at 150 like a lot of people were saying it deserves to go to. So we'll see what happens. Amazon at 172, Tesla up 1%. Again, S&P at 0.39, Snowflake at 1.3, and then NVIDIA right here up 1% on the day. Oh, SoFi. Yes, where's SoFi? SoFi ended at $8 yesterday. SoFi at $8.18, baby. There you go. Maybe it's time for SoFi to break out, man. Maybe it's time for SoFi to break out. 818 up 2% in the pre-markets. It hit 830 yesterday. Again, see, there's this fall. It fell because the whole market fell. I think there was homes data or some type of data came out. This was at 105. At 105, the market just started, or 205, the market just started falling yesterday. But maybe we get a Friday little pump and we don't get a massive sell-off on Friday. There are going to be a lot of options expiring today for every stock, but let's see how this ends up playing out later today. All right. Thank you all for being here. For the people that are just joining that had no idea that I started the stream late, welcome. I just snitched on myself right now. Blake says, did you sleep in? Yes, I slept in. Dude, I really don't know. I can't even remember my dream. Usually when I sleep in, we started the stream at 9 a.m. today, not 8:45. So about 15 minutes late. Usually when I sleep in, there's a dream that is encapsulating me. And it's like I woke up and I realized I woke up late, but I didn't like wake up with some dream in my head. And usually when when I sleep in, dude, it's a dream and I'm like really into the dream and the dream is keeping me in there. And that's kind of why it's also hard to wake up. Usually it's a girl. That's just how it ends up happening. There's some girl from my past. She's in the dream and it's hard to wake up. This time wasn't it, dude. This time was just pure exhaustion. It was just pure exhaustion, just like pure sleeping. And then I wake up and I'm like, oh, I have to get to work. So that's kind of how it played out. But hopefully we justified the concept of time in the morning. If you guys caught it in the morning. News on Intel, they discussed a possible plan to split off the foundry business as a separate stock. Okay, so I saw this as well last night. So let's take a look at this and then we'll get into NVIDIA. This is actually one of the last things I saw last night. It was one of the major headlines. This is weird, dude. This is weird. So where's Intel right now? Is Intel? I'm going to bet Intel's down on this news. I'm not going to bet Intel's up. Did the market like this news or not? Intel, let's see. The stock, Intel, INTC. Oh, market's up. They like it. Okay. So again, I read this headline last night and then I fell asleep, so didn't really know too much about it, but let's analyze it. Intel is in talks with multiple investment banks asking for advice as Intel stock has fallen over 50% this year. It is discussing multiple plans, including splitting its product design business and manufacturing. It is also in talks to scrap some new factory plans. So would this mean we're getting a little bit of a division in terms of the core business? Like, is the business itself going to be split up and then different stocks are going to be like part of the Intel brand, kind of like Google was trying to break up, or people wanted Google to break up YouTube and Google Cloud, etc. I understand the consulting with investment banks. They're probably looking for a lot of ideas. The problem with Intel is that it's trading below tangible book value, but there's no narrative. Like SoFi, the narrative is rate cuts helps their lending business. That's why it's getting momentum. For the past 8 months, there really was no narrative with SoFi. Same thing with Palantir, AI, acceleration. There is a narrative. That's why people are excited to take a gander at Palantir. With Intel, there's really no narrative, but if they're going to get some activist investors, potentially get rid of the CEO. Now, I don't think Pat Gelsinger is going to is going to like leave Intel. He's been there for a long time. I don't think he's going to leave, but if he did leave, I do think the street would kind of like the idea that there's a new CEO and someone can turn it around. But I don't know who's going to turn Intel around. So seems like this is bullish overall. It'll be interesting to see if the market really cares about this in the next couple of weeks and if it's not just a random headline that's pumping it. But if they split up the business, if they get a new CEO, get new management, it's probably what Intel needs at this point because there's so much of a market opportunity in the foundry business and in the PC business. It's just about execution. And Lisa Su and Jensen Huang obviously have showed off that execution as well. Okay, let's talk about this real quick on Palantir. I see you guys see some of you guys saying it in the chat. So Shyam Sankar, CTO of Palantir, he tweets this yesterday. That is a Celsius can with a Palantir logo on it, replacing the Celsius logo. I think people are taking this a little too far. I've gotten like 5 DMs. Like I woke up to 5 DMs, all these comments like, oh, is Palantir and Celsius working together? First of all, I don't know. Second of all, if you know Shyam, he drinks a lot of Celsius. Like if you know Palantir, all the employees drink a ton of Celsius. Now, I think Celsius is disgusting. I've never been a Celsius fan. You guys know that about me. Never thought it was interesting. Is there a 1% chance he tweeted this as a kind of like off remark of like, hey, we're working together? Maybe, but Shyam's not like that, dude. Like Elon is the guy who will put like a hint out about a potential partnership, Shyam, I don't think he wants his lawyers coming at him at night, being like, why'd you tweet this? But I think he just tweeted it as like a fun joke because if you know Shyam, he drinks a lot of Celsius. So, along with a lot of other Palantir people. And he talks about that in his Substack. Like he's been very public about that. So I do not believe there's a Palantir Celsius partnership. If there is, that'd be pretty cool. And that would be fun. I just don't think Shyam's the type of guy to like preview a partnership. He's just never been that type of guy. And maybe he's changing, but I mean, that's not what I think. So from that perspective, I think people are reaching. A little too far on that. But if it happens, it's great. If we get a Palantir Celsius partnership, that would not be too bad. I remember he said they drink a lot of Celsius at the office. Yeah, that is like the literal Palantir drink. Chad is the only one who doesn't like Celsius as much as me. He likes Red Bull. But when I went to the Palantir offices in New York, like everyone drinks Celsius. In their other offices all across the world, they drink like Celsius is just their drink. Also, you got to imagine there's a lot of engineers coding constantly. Like you need energy. So a lot of tech companies have energy drinks. But Celsius just became, Palantir Fuel, essentially. That's what it's called. That's what it became. But I've never liked Celsius. Speaking of Celsius, let's look at their stock. Where's Celsius right here? Celsius up 0.77%. 35 is the technical level we need to hold on Celsius. That's what Jason has been telling us on the show. So if we break below 35, I might break into the 30s. If not, hopefully we have a chance to reverse back into the 40s as well. All right, there you go. So that's what we had on Palantir and Celsius. Let's talk about NVIDIA, because I know people are still curious on what's going on with NVIDIA and sort of what is the core thesis around NVIDIA now that we are done with earnings. I said this yesterday on the market close, and I kind of am coming to this conclusion and this thesis. I am happy that the market is not that the market is not giving NVIDIA this massive pump. And the reason for that is because I kind of think we need to get to the point where we are normalizing that it's okay to not be obsessed with NVIDIA. So NVIDIA down 6% after yesterday, 0.94% on the day right now up. It's, relatively flat. It's at the same price it was 2 weeks ago. It's not like it's anything that different. I think that this is good. I think that the market's coming to the conclusion that, hey, NVIDIA matters, but it's not like the only thing in the world that matters. And we need to also come to the understanding that NVIDIA, as important as it is, there's a lot of other companies that are out there. And if there's a lot of other companies that are out there, then we need to realize that there's a broadening of the rally that can continue to happen. Pedro says, totally agree. Like I was thinking of this last night and I was like, is it the worst thing in the world if on the next NVIDIA earnings, it's not a national holiday for NVIDIA? Like, I think it's actually really healthy. Jimbo Slice says, honestly, the rest of the market was up and NVIDIA was down. That's healthy. Yeah. So yesterday at 1 p.m., S&P was up 1%, QQQ was up 1%, IWM was up 1.5%, NVIDIA was down 3%. And it's like, okay, cool. That's all we really, that we needed the market to say, hey, NVIDIA goes up or down, we don't care. Now, if NVIDIA goes down 20%, is that good? No. But NVIDIA is not down 20%. They had a phenomenal quarter. They had a great earnings. There still seems to be a lot of trajectory in terms of the future for what they can do. And the market's just moving on and kind of realizing, all right, that was NVIDIA, and now we'll keep going forward. So those are my thoughts on NVIDIA. There's nothing else that crazy about it. The numbers, again, were phenomenal. We went through all the numbers yesterday. I don't think the numbers could be any worse. I talked to a lot of people yesterday in terms of what they thought about NVIDIA, a lot of people that owned NVIDIA, and they said, hey, we're kind of just chilling. We believe this is a, $6-7 trillion company over the next 4 or 5 years. And so we're just holding, and like Jensen's going to keep doing what he does. So I think if you own NVIDIA stock, it's not that crazy. I think if you want to initiate a position, selling puts is not horrible. The premiums are great. You got to be comfortable buying it at $90 or $100 and getting paid to buy it. But outside of that, dude, maybe the NVIDIA like anxiety is done. Not the hype, because in the next 90 days, we're probably going to redo this whole thing and everyone's going to be super excited about NVIDIA. But I wonder if the overall feelings of like, oh my God, they have to crush, it has to be so good, that goes down a bit. And then if they don't have the craziest numbers, the market's like, all right, we're moving on. And so those are kind of the thoughts I'm having on NVIDIA and how I think it's going to play out. SoFi right here up 2%. Look at that, 820 on SoFi. One thing about SoFi, and then we'll go back to NVIDIA, there's 190 million shares sold short on SoFi. Well, let's do a poll. Who has SoFi? We haven't done this in a long time. Who actually owns SoFi? Let's see. Let's get a poll. Do you own SoFi? I think those 190 million shares are starting to get fucking scared, and they should be getting scared because you should not be shorting such an exceptional company like this. The shorts have worked for almost a year now. At some point, the short trade has to go wrong. And at some point, the market has to realize this is a company that matters. You can still argue valuation. I'm not going to deny that it trading above tangible book value isn't a solid bear thesis. I've made that bear thesis. I think that bear thesis is fair. But in the upcoming rate cut cycle, price to tangible book value is just not going to, it's a stupid argument in my opinion. Like, it just doesn't matter because their core business, which is being a bank, benefits from a rate cut. Like, this is not rocket science. This is like rate cuts are good for banks. If you even believe SoFi is a bank, their top line business should be affected to the upside, and that street's going to price that in. And I think $9-10 is just not insane. Especially if the shorts squeeze. So you got 190 million shares that start squeezing. We get a squeeze. I think things are going to be good. I think things are going to be good for SoFi. We have 63% of you that own SoFi. All right, so a decent amount of you own SoFi. I think it should be okay. Chris Patel, shout out to you, Chris, in the chat. You've tweeted pretty much what we talked about in the beginning of the show, Chris, which is that inflation's coming down, baby. There you go. Inflation's coming down. And again, inflation coming down, that's good for the rate cut narrative. That's obviously good for SoFi. And that's good for a lot of banks. I still have options that I bought on SoFi when it was $4.50 in May of 2023. Have not sold them. So for me, it's just a question of like, hey, if now they're in the money, they were $7 calls. I think they can get deeper in the money. And I think it would make sense to give it a shot and wait. I don't think you sell right when it's at pumping up. Like the time to sell was when 7 months ago, when it was basically dead money for 7 months. Take that money, and then the opportunity cost is better. If you stayed with it, you might as well just see if it can continue going higher as we get into that rate cut. At least that's my perspective. And so we'll see where it goes from there. But I think SoFi is going to be in a good spot. Now, speaking a little bit more compounding on the NVIDIA discussion. So Apple, I don't know if you guys caught this headline yesterday, but Apple, not only, we talked about this yesterday, they're ordering 10% more iPhone units. So they're expecting to sell 10% more phones. But late last night, or actually it was right before the market closed, they said they're investing in OpenAI. Well, the rumor is that they're investing in OpenAI's round, which is kind of crazy, bro. OpenAI said, hey, we have 200 million weekly active users for ChatGPT. So they doubled that since the fall, which is crazy. 200 million weekly active for ChatGPT. And then Tim Cook comes out. Again, he didn't say this, but like, I believe this is probably going to happen, because why wouldn't you invest in the company that you are partnering with for the model that's going to power the first generation of Apple's AI fund? Wall Street Journal says the investment will be part of a new OpenAI fundraising round that would value the ChatGPT maker above 100 billion. People familiar with the situation said. Microsoft, we know, is investing. It looks like Apple's investing as well. Sam Altman has become one of the most important people on planet Earth. He has got Satya Nadella and Tim Cook to dance for him and give him the keys to the kingdom that is the, I would say, tech market in general, enterprise tech market, AI tech market, consumer tech market. I mean, he was able to do it. And he was able to do it because ChatGPT is one of the best models, or GPT-4o is the best model that's out there. I saw someone tweet yesterday. I thought it was hilarious. They're like, wow, congratulations on OpenAI for becoming the first $100 billion nonprofit. It's just like, it's kind of crazy, right? It's kind of crazy. I mean, like, look, I don't trust Sam Altman. I think a lot of people are leaving OpenAI. I'm not saying this is like the massive bear case for OpenAI and OpenAI is going to fall, but I do think we need a hedge against OpenAI. And I think the reason Grok raised $6 billion is because I just don't know if Sam Altman is going to be the guy that brings AGI to the world. Maybe he is. I'd rather put my bets on Elon, to be honest. But it is funny that Tim Cook and Satya are both like, hey, whatever you do, we'll support it. And as long as you don't have a mess up, I guess it's a good partnership. But all these safety people leaving definitely is a little fearful for the partnership. But we'll see how it ends up playing out. So again, OpenAI said we have over 200 million weekly active users for ChatGPT. There's one more piece of news on top of this for the LLM companies. Meta, people missed this yesterday. Meta said they have 400 million monthly active users for Meta AI. Now, you may not formally know what Meta AI is. Essentially, when you search on Instagram or when you search on WhatsApp or you search on Facebook, there is, I'm pretty sure you guys have seen it because like if you use those products, you know, it's a more smart search. I don't know if that's like literally a competitor to GPT. I mean, it's kind of a competitor. WhatsApp has their own chatbot and stuff, but those 400 million active users, they probably like, you know, maybe accidentally search into it. I don't think they're like definitively using it like ChatGPT. Like if you go to the ChatGPT app, there's a sole purpose. Whereas on Instagram, if you're searching for something, you know, you search and then it might just end up being a Meta AI product. But the broader point is whether it's Meta AI or ChatGPT, there is so much momentum going into this trade when it comes to AI and when it comes to, you know, how many people are actually using it at the end of the day, which I think is very important to understand. We're getting a call from a good friend. He doesn't usually call at this time, so let's pick up. Let's see what he has to say. Steve, you are live on the Market Open.
Good morning, Annette.
Good morning. Usually you don't call at this time. Is there anything you had to say?
Well, yeah, I decided I wanted a bagel, so I'm going to get a bagel. But I decided I'm going to buy more NVIDIA this morning. Just wanted to let you know.
Okay, so we have the market open in 8 minutes. So let me keep you here for 3 minutes. First of all, what bagel, and then second of all, why NVIDIA?
Everything bagel with butter, and I went through the report last night, and I don't see how there's not another 2 to 3 years of spend with NVIDIA.
What in the report kind of made that obvious?
Just the tone of the report and how impactful I think Blackwell is going to be for people who don't upgrade to it. Just the competitive edge that these companies are going to have that are utilizing the Blackwell servers versus companies that are on Hopper. I think that this is something where in a race to be first to market with whatever this market's going to look like, you're going to have to be on the latest technology or you're going to get left in the dust.
I would tend to agree. I think that's a solid bear case, and it's down about 10% from the highs. So a dip by or selling puts is not a horrible situation either.
I mean, do we think that at this time next year, NVIDIA is not going to be 140 or 150?
No, the only case is a recession. But if we avoid that, which we got PCE data today, is coming in lower than expected, then I think NVIDIA is higher a year from now.
But even if we go into a recession, these companies aren't going to stop spending.
Yeah. No, that's
because the
fair.
recession's not going to impact Meta, Alphabet, or Amazon. It's just not going to impact.
Yep. No, that's fair. Steve, can you make the show today for the market close? We'll talk more in depth about this.
Yeah, sure. No problem.
Okay, so 4 p.m., guys. We'll have Steve on the market close probably for like 45 minutes to an hour, and we'll dive deeper into all of his thoughts.
Sounds good. I'll talk to you later. I got to work.
Enjoy the bagel, Steve. Talk later.
Plural bagels.
Okay, enjoy the bagels. Bye. Dude, I haven't had a bagel in a long time. It's been a while since I had a bagel. But there you go. You got someone like Steve, who honestly was not that early to the NVIDIA story. I think he started buying at 120, to be honest, a couple of months ago after the split. He has gotten more and more convinced that the NVIDIA story is becoming as exciting as you can imagine. NVIDIA right here up about 2% right now, 1.5% in the pre-markets. We'll see if we can hold that momentum. But he is someone who will be buying more NVIDIA. S&P 500 up about 0.5%. Palantir up about 0.9%. Robinhood 1.09%. SMCI up 2.94%. Upstart up 1.17%. And then Affirm yesterday was also up 31%, down a little bit right now in the pre-markets. What type of bagels do you get? I like everything bagels. I think everything bagels are good. Everything bagels with the right, they have all the right seasoning and flavors. I look, okay, so one thing I'll say, you guys know I'm not a mayo guy. And if anyone says they put mayo on their bagel, you got to be banned from the show. I'm sorry. So we need to make sure that's true. When it comes to cream cheese looks like mayo. So I'm light on the cream cheese, okay? Whenever I go to a Dunkin' or something and I'm like, hey, I say bagel, light on the cream cheese, I look them dead in the face and I say, hey, dude, light on the cream cheese. And then if they put too much cream cheese, I go back and I'm like, that's not light on the cream cheese, my guy. Because if there's too much cream cheese, it feels like it's mayo. And if that happens, that's my worst fear. So I make sure they're like, buddy, light. I want to make it seem like there's no white stuff here. There should be just enough white stuff on the bagel for me to get the abstraction of cream cheese in the taste buds, but it shouldn't feel like I'm eating into the cream cheese. It should be an afterthought. That is how I deal with bagels. So as long as that's good, we can eat the bagel. If not, then the bagel's in a tough situation. Apple right here up about 0.5%. NVDA right here up 1.67. So let's go through earnings. We have 3 minutes until the market open. Yesterday, we had a bunch of earnings, and most of the companies did well. So Elastic, which is like this AI search platform, I found about it yesterday. That one did bad. That's down 26%. Kind of makes sense. It doesn't seem like they're a standalone product, to be honest, but $10 billion company. So we'll see if there's any dip buyers today. Autodesk is up 4%. Marvell, semiconductor name, up 10%. Lululemon, which didn't have a bad earnings. They didn't hit their best numbers, but they didn't have the worst earnings, and they didn't blame the consumer, which is very important. They're up 3%. MongoDB up 17%. They knocked it out of the park. And the stock was down 50% year to date, so it needed a turnaround, and they got a turnaround. Dell up 4.5%. I think Dell would be up 10% if they actually had better operating margins. It looks like those operating margins are still negative on Dell, which is why it's only at 4%. And then Ulta Beauty, they crapped the bed. Ulta Beauty absolutely crapped the bed. And it looks like makeup is not in as high in demand. Now, the interesting thing about this is whether it's Dell or Lululemon, they're not blaming the consumer. They're not blaming the consumer. I went through the earnings report. I didn't listen to the call yet, but I went through like the top line report last night. I listened to the CrowdStrike call last night. I'm going to listen to the Dell call over the weekend, but they're not blaming the consumer. And I think that's very encouraging, dude. Lowe's didn't blame the consumer. Ulta's not blaming the consumer. Abercrombie, that fell 15%. They're not blaming the consumer. And then Lululemon not blaming the consumer. The company that blamed the consumer last night was Dollar General. And that's okay, in my opinion, because Dollar General, they said that most people that buy inside of their stores, Dollar General down 32%, but now it's up a little bit on the day, 1%. The reason most people that shop at a Dollar General, they make $35,000 or less, and they use multiple credit cards. So you would imagine those are the lowest end spectrum of the consumer that's obviously struggling a little bit. You know, like that's fair that they're down 32% because that consumer is probably not in the best spot, but that consumer is not necessarily the broad market consumer yet. You know, there's a little bit more money in the system to the point where those consumers are getting so tapped out. But when they go to a store like Dollar General, they're just not going to be spending as much. Also, a lot of those consumers, my theory is that they started consolidating their spend at Walmart or Target. So instead of going to Dollar General, which maybe they would get some cheaper prices, they'd rather get a better deal out of Walmart or Target. And so if they're already tapped out for cash, they're not going to be, going to a random one-off store. They're going to be going to a store where they get all their needs because maybe they're doing one purchase of groceries or essential needs a month instead of going 2 times a month. So that company is down from the consumer perspective, but every other company so far that's reporting is not blaming the consumer, which is really bullish to me because they're saying, hey, it's our fault. We'll figure it out. And if it's their fault and they'll figure it out, then they have another quarter to kind of right the ship, which is very important to make sure that this recession hopefully doesn't end up happening. All right, last day of August, folks, for trading. It is August 30th, 9:30 a.m. The stock market is once again open. Wake your ass up. Here we go. 119 on NVIDIA, up 1.6%. So you got NVIDIA getting a little bit of a bid right now. Apple stays flat on the day. Celsius up 1%. Intel up 6%. Some news came out about Intel last night about them splitting up parts of their business. SoFi goes red. Interesting. I think that red candle is fake. I think the buyers are going to step in. I think this red candle is so fake right now. I don't think it goes from 820 to 804 that easily. So I think people will step in and buy the dip. But let's see if that ends up playing out. Snowflake up 1.37%, S&P 500 up 0.45%, Robinhood basically flat on the day as well. Palantir flat on the day as well. Is everything going flat? Is everything going red? I think we're everything. Yeah. Well, S&P's, there's a red candle right there in the S&P, but a lot of stocks are just going flat or red. CrowdStrike, wow. CrowdStrike up 3.4% back into the 280s. Berkshire Hathaway 471, Rocket Lab 624. IWM is up about 1/3%. Ulta is still getting hit. Where's Ulta? Yeah, Ulta's still getting hit, down 6.5%. You know, it's interesting that whole lipstick index we learned about a couple weeks ago, which is that if we get into a recession, women will buy more of makeup and stuff like that. Maybe if we actually do have a recession, that'll be a tailwind for Ulta. But if we don't get a recession, they're going to have to find organic levels of growth that becomes a tailwind for Ulta and for makeup. Again, guys, the recession indicators, we look at a lot of them every day on the show. If you are just joining the show, the biggest recession indicator, or one of the biggest recession indicators, or based on the logical syllogism of if we'll cut rates enough or not, is inflation. If inflation is too hot, we cannot cut rates. If you're just joining, PCE inflation for July came in at 2.5, below expectations of 2.6. Core PCE came in at 2.6, below expectations of 2.7. Yesterday, we revised GDP data to 3%, and unemployment came in 1,000 lower than what was expected, 231,000 versus 232. Every piece of data we've gotten this week, besides new home sales, which we already know that new home sales are in a recession because rates need to come down for people to actually buy a home. So I think that's a catalyst at the end of the day. Every other piece of data has been good on the recession front in terms of, hey, maybe a recession is not going to happen, at least so far. So I think that's why the market's right here, pretty much near all-time highs at 561. Even with NVIDIA, struggling down 6-7% as of yesterday, market's kind of close to all-time highs. And that's interesting, right? Because NVIDIA is 6% of the S&P 500. You would think NVIDIA falls 7%, maybe the market falls 1 or 2%, and that really hasn't happened. 560 on the S&P, 565 is the all-time high. 564, I think we cracked a week ago. We haven't been able to get to that all-time high again. But if we continue to get good data like this, hopefully that will happen. Where's Palantir? Palantir on the day. Oh, Palantir's down 30.76. Palantir is down $30.76. So we talked about Palantir a little bit yesterday with that new report that came out on Palantir, which was the Forrester wave that ranked them number 1. I played this on the market open, but I played this on the market close. I didn't get to play this on the market open, which I said I would do. So I want to play this right now. Did I play this yesterday? No, I don't think I played this yesterday. Well, but I'll pull up a clip of someone talking about CNBC, someone talking about Palantir on CNBC. I thought it was a really resounding vote of confidence. So we'll play that in a little bit. But it does seem like Palantir is getting a little bit more media coverage across the mainstream networks. Palantir right now down a little bit right here, down 0.5%. SoFi, $8.15. That's up 1.43. So that collapse to $8 definitely felt fake at 8.03. We're seeing some momentum there. I expect SoFi to close at least above 8.15 today. I think that would be a really, really positive sign. If we don't get a massive Friday sell-off, SoFi could get some more momentum. Bank of America, that one down. Warren did sell a crap ton of Bank of America on Monday. Now he's sold over $5 billion in the past 2 months. Wow, that's up $40. There you go. Makes sense. Rate cuts are bullish. Now, again, I think Buffett's selling. It's a little cautious because he's raising cash, but also he has so much Bank of America. I think his stake is worth $42 billion. And Bank of America is a $312 billion company. Now it's probably worth $37 billion because he sold $5 billion. But he has a lot of Bank of America, so he's not too worried, I think, about having more. But the sell was interesting. I mean, he's definitely taking advantage of the run that we've seen in Bank of America, and he's not having a problem continuing to raise cash. Lowe's is up a little bit. Where are the earnings companies from yesterday? So yesterday we had Elastic, that's further down 25%. Marvell's up 7%. Lululemon just went red. It hit 270, then went red. So Lulu is red, even though their earnings, I don't think were horrible. MongoDB up 15%. That's well-deserved. And then Dell is up 2%. Unfortunately, Dell is just not getting those operating margins up, so I don't think you're going to see a lot of momentum on Dell. I think it's going to be flat, to be honest, until we get operating margins up. And then Ulta is down 5%. A little bit of recovery right here. It was down 10%. Now it's down 5%. But Ulta is still down. Kris said, send me a StreamYard. All right, we're going to get Kris onto the stream. Kris, I will send it to you on Zuckerberg's platform, WhatsApp. And you should be getting it in just a second. Okay, cool. It is sent. All right, guys. So we'll get Kris on the show, get his thoughts on what's going on in the market. Again, he has some personal stuff he was dealing with over the past couple of weeks, which is why he's been a little busy. But he'll be on today. Crypto, Bitcoin at 59.5. Not bad. MicroStrategy at 133. Robinhood at 20.10. Kind of the Bitcoin stocks relatively flat today. Coinbase down a little bit. And then CleanSpark. Wow, CleanSpark's below $11. This one has just been an annoying situation. Again, here's the interesting thing, right? Bitcoin was at 43,000 in January. CleanSpark was at $17. Bitcoin's at 60,000 right now, 59.5. CleanSpark's at $10. This is the issue with the miners, dude. It's a ruthless journey, and until Bitcoin pumps, the cost of mining continues to go up for CleanSpark after the halving event, but the revenue they're getting is not the same. So we need this like Bitcoin pump to happen soon, and hopefully it begins to happen going into Q4. Oil prices today. I posted a picture yesterday. Oil prices or gas prices in New Jersey, they're at $3.03, dude. It's incredible. Wow, we're down another 2% on oil. We're down another 2% on oil. Dude, inflation's coming down. Inflation's coming down. I would not be in a trade that requires inflation to go up going into September CPI. It's coming down, dude. It's coming down. Yesterday, gas in New Jersey was $3.03. $3.03. I have not seen $3.03 in a long time, bro. I have not seen it in a long time. So we got oil coming down. The whole Middle Eastern conflict at the beginning of the week with Russia, Ukraine, Libya shutting off production, all of that seems to like not matter. Again, market takes something in, prices it in, and then prices it out. We were pushing $80 on Monday. Now we're back at 74. And if by next week we're closing in on the low 70s, that's just very, very bullish for inflation coming down and gas prices coming down. NVIDIA up 1.5, Tesla up 1%, Google up 0.3, Amazon up 1%, Meta up 0.5, Microsoft up 0.3, Apple up 0.19. So Mag 7 is flat besides NVIDIA. They're up a little bit right here, 1.6. We'll get Kris's thoughts on NVIDIA. I mean, you guys have heard the bull case from Steve. He came on the show yesterday. The other person I was talking to on that phone call was indeed Kris, and he was a little less bullish. So we'll get another perspective around NVIDIA as well. I just got paid out a hefty dividend from BITX today. I didn't even know that was a thing. Yes, that is a thing. BITX does pay a decent dividend. Even yesterday, dude, BITX was up 7% when Bitcoin was running at the top of the morning. I think CleanSpark was up like 4%, or the WGMI, that's the Bitcoin miner index. This was up like 5%. So even then, dude, like outside of Iran, which had a outperformance because of its own reasons, and it was up like 17%. I still felt like the leverage ETF was outperforming the miners. And I don't know, if you're going to take on a lot of risk, I feel like the leverage ETF is worth the risk versus the miners. You're dealing with a company at the end of the day, and it's a little bit more risk to get alpha from Bitcoin. SoFi right here at 821. So you got SoFi back into that 820s at 2.18%. I don't think that SoFi again doesn't have a shot to move higher. Let me check the resistance right here on SoFi. Palantir, by the way, back up at 31. So we got Palantir at 31, SoFi at 822. The resistance now on SoFi, let's say 850. 97,000. Wow. So at 848, there's 124,000 shares. At 849, there's 104,000 shares. At 850, there's 97,000 shares. So you've got a lineup of 300,000 shares going from 848 to 850. It looks like getting into 850. If we break 850, this thing's going to run, but breaking 850 is going to be very hard unless the volume just comes in. The volume right now on SoFi, 4 million in 9 minutes. Not bad. 4 million in 9 minutes on SoFi. So yeah, there's going to need to be a lot of volume to continue breaking that. NVIDIA maybe breaking the 120s right here, up 1.81%. S&P also up more than 0.5%. Maybe it goes for 562 soon. Doug says, I'm taking this NVIDIA dip to buy back my covered calls. I think that makes a lot of sense. I think if we get a volatile September and it's an opportunity to where you have covered calls that you want to get out of before a November, December run, then that's not a horrible thing to buy them back a little bit cheaper. Rocket Lab up 3%, MicroStrategy up 1% on the day. And then you got Palantir just going flat at $31. Okay, we'll have Kris on in like 2 minutes. Let me see if there's any other major headlines right now that I was looking at. I don't think there's anything that crazy this morning besides PCE data. Okay, we talked about earnings. OPEC is likely to proceed with a planned output hike from October. That's one piece of news that came out this morning. Needham reiterated their buy target on Google at 210. Jefferies put out a buy target on Alibaba at 116. Okay, so it seems like they are saying China is undervalued and we deserve to get exposure. Citi upgraded Abercrombie to 190. They said despite a 14% sell-off following a strong Q2 report that fell slightly short of higher market expectations, we see a compelling opportunity to own this unique asset. This is really what we want to see right now. We do not want to see a retailer that put up amazing earnings, didn't blame the consumer, and fell 15% to get a downgrade by a Wall Street firm. The Wall Street firm should be looking at it as a massive opportunity. Hey, great retailer, operating margins are up. Market had a sell-off because of irrational expectations that were a bit too high, but the company didn't say the consumer is struggling. Therefore, we think this is a great opportunity to get in. We aren't afraid of this stock. The more Wall Street firms get afraid of retail names, the more, you get fears that, hey, a recession maybe is starting to get priced in, but it doesn't necessarily seem like that's happening. Yeah, those are pretty much most of the headlines. Jeffries also said that Meta's Llama AI business could be worth $10 billion, which probably adds a little bit more market cap to Meta just on all the use cases that they could have to deploy Llama. SoFi 819, S&P 500 561, SoFi 819, Snowflake at 115, S&P 561, Palantir 3107, and then NVIDIA right here, 2 cents away from 120. There you go, back at 120. NVIDIA up 2%. NVIDIA up 2%. All right, folks, let's get one of our favorite analysts on the Market Open who has not been here for a couple weeks, but he is joining us today. We have Christopher Patel. Chris, what's up? You're muted. You haven't been here for too long. You forgot how to do this.
I know. What's going on, man? How are you today?
I'm doing very well. Do you want to quickly say kind of why you've been out for a couple weeks or
yeah,
leave it alone?
My father-in-law, he was diagnosed with heart disease. We didn't know how severe it was until he went to the hospital, and basically he had multiple blockages in his arteries that feed the heart, and he had to get an emergency quintuple bypass surgery. For those that aren't aware, Indian men, especially if you're over the age of 40, highly recommend you guys at least once in a while, according to your and speak to your doctors, of course. Get a cardiac CT. That's a calcium score CT, but basically it identifies if you have stenosis in the heart or these heart blockages. So Indian men, we have a pre-existing genetic condition, and then also our diet isn't exactly the best in the world, and we all kind of face this tragedy together. And one of the things is that we have to just be a little bit more active and work on our health, but two, we have to be more active in terms of taking care of it. I know Amit's dad, we were talking about it, how he was having a very similar, he had the same thing happen to him last year. Yeah. It happened to my father-in-law this year. I had an uncle pass away about 5 years ago, same condition, another one who had to get another bypass. So like I said, it's not something that is unusual. It's actually pretty prevalent in our community, and it's always best to just take care of it. But everything is.
By Martin says, I thought Indians were most vegetarians. It's not about the meat. It's about the stuff in the vegetables that we eat, right? And the grease and all that.
We have a lot of trans fats in our diets, and those trans fats add to and there, it's also some genetics in there too, but it's just not a great condition to be in. The one good thing is my father-in-law, he got a surgery yesterday. He got out yesterday. He's great. He's doing really well. Hopefully everything works out well for him and he makes a full recovery, just like your dad did, Amit. So it's always good to reach out into your friend circles and have that supportive community around you that that can just walk you through some of this dark time. So it was nice. So my wife has been a true champion because she works at a hospital, so it's been good. But yeah,
and it's a reminder to us that are Indian men that we got to get our shit together, and we can't be afraid to go to the doctor. Because when my dad had this issue, and I think I told everybody, my dad had open heart surgery last year. He didn't even want to go to the doctor. Because there's this Indian male apprehension of I'll just do it myself. But it's like, dude, you're going to die. No, you got to go to the doctor, right? So we can't be afraid to go to the hospital. And I'm sure that's not just an Indian thing. That's for a lot of immigrant cultures as well.
I'm actually kind of pushing my dad now. Get your ass to the hospital, go. Because he's the type of guy, I remember he had latent TB. So he had TB when he was a kid. I mean, this is way back in the 1970s. And about a few years ago, he ended up coughing up some blood, and my mom was like, "Go to the hospital, get a check." He was like, "No, no, no, it's fine. I just have a really bad sore throat." I was like, "Bro, no one has a sore throat. It's like coughing up blood. What the fuck is wrong with you?" You know. So eventually, like, I forced him to go, and then found out he had latent TB. The good thing is with latent TB is that now it's actually curable. So they, you know, they put you on some medication that they help you out. But
Right.
it's a very interesting dynamic. But let's get back into the market.
Okay, so I know you have a lot to say about NVIDIA. Guys, TJ will be on at 10:30, so we'll have Kris on for the next 45 minutes, then we'll get TJ on. So we got Kris and TJ today. We have a lot to say about NVIDIA, but before that, let's do macro. So GDP 3%, inflation below expectations. What is your perspective on what's going to happen over the next 3 months in this macro economy?
I think we are going to do well for the next hopefully 30 to 90 days. I think there's going to be some volatility, but you know, under the backdrop of rate cuts coming in, you know, there's optimism in the markets, the job numbers are looking okay, you know. So there isn't necessarily that giant weakness that, you know, was basically coming up a couple of weeks ago where everyone's like, "Oh, sell, 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 we're going down, everything is bad." No, that's not necessarily the case right now. Right now, according to the data, everything is working out okay. We are in a soft landing zone right now. The question is, will the new political regime that comes in ends up screwing us over or keeping us, you know, landing that soft landing? So hopefully, you know, hopefully everything works out in November, and you know, hopefully even if it's Kamala Harris or Trump, both of them understand that the economy is very delicate right now, and you don't want to do too much too quickly to prove yourself. You know what I mean? Saying,
Yeah.
I'm going to do this crazy thing. Like, here's an example of something that could be crazy. Let's say Trump comes in, issues a sweeping border policy where now all of a sudden all these migrants are, you know, quote unquote, in the first 100 days deported. So now you have all of a sudden all these like people getting deported out of the country where they could be working jobs. And now those employers are now having to scramble for workers, causing more inflation to happen. So all these things, everything has to be structured. Same thing with Kamala Harris and her policy comes in, not renewing those tax breaks, tax cuts. Those can have an impact in the market as well. So a lot of this stuff has to be grounded. So I'm going to be keeping my eye on the politics a little bit, but for now, I think especially going into December, I think we could get a strong year out.
You are not in the recession. Is there any data besides the election volatility that makes you think there is a good chance of a recession in the next 6 months?
I would say the only thing that comes to mind is something around a bubble popping. Because most recessions, you need a trigger. Okay, you need something to work really badly, and then it impacts the general economy. So the two things that I'm seeing like weaknesses, and of course, one of them is shelter, right? You're seeing a lot more inventory come to market, and then on the other side, you're also seeing this thing with AI, where right now, as of right now, AI is still, you know, doing okay, but you're starting to see the chinks in the armor when it comes to a lot of the AI initiatives that are out there. So in my opinion, I think at some point in 2025 we could see a major correction in a lot of the AI plays. And so I'm trying to just position myself in a very defensive way to counteract that. One thing I just want to share with you guys, and this is actually very interesting to look at, is this right here. Have you ever seen this summit before?
What is this?
Okay, so BlackRock, one of the things that they do is they do a good breakdown of, especially by year, of different asset classes and what their performance looks like, usually by every year, right? So if you look at U.S. equities tend to do really well over a long period of time. So if you look there at the top, on average for the last 10 years, they've yielded about a 13.1% total return. Japan equities is up there. Europe equities are up there. At the bottom has been kind of like cash, commodities, or whatever. So this is an average return. But when you take one step back and you look at like what the best performing asset classes are relative to other ones, you can actually see that there are these minor differences that could theoretically get played into next year. So as of right now, you're seeing 2023 and 2024, US equities were up 27%. And then this year, up to now, they're up about 16.3%.
Can you zoom in a little bit on 2023, 2024?
Yeah.
Yeah, there you go. There you go.
Right.
Perfect.
So the top performers this year have been US equities, right? Last year, there were US equities. The year before that were commodities. The year before that was commodities also. So the question is, what category of asset class is going to do extremely well in 2025? And this is where we have to ask ourselves where we are in the market cycle. And like I said, some of the most underperformers of the last few years could actually end up being outperformers going forward. But you rarely see multiple years of expansion like we have seen in the last couple of days. So because of this expansion here in 2023 and 2024, valuations on the S&P are actually really high. And this is something that I'm concerned
trading at
about.
25 times earnings. It's a lot.
Look at this. Yeah. So this right here, you can see on a forward basis, not on a today basis, on a forward basis, we're looking at about 2021, which is, it's not dangerous. It's not like bubble territory of the .com era, or in the 2010s when everything was kind of just riding, higher. We're somewhere around here right now.
And this also matters because this is forward, which means the market's expecting next year's growth to be worth 21 times the growth. So if we don't get next year's growth that we expect, 21 times becomes just unreasonable as a
right. And it kind of depends on which sectors we're looking at too, because I think there has to be some broadening out. Like Tom Lee is saying, if you look at like the S&P 600, which is like the small caps, they're somewhat fairly priced. Historically, they're actually a little bit undervalued. So this is where guys like Tom Lee are coming in and saying, look, there's actually some possibilities for a 30-40% rise in the small caps. So my thing is, if you look at something like NVIDIA is kind of already trading at a really, steep forward multiple. So expectations are just really high. NVIDIA is a great company. No one can deny that. But expectations, if you have high expectations and you don't meet those high expectations, you're going to get sold off.
Okay, so let's get into the NVIDIA conversation. So this is the part of Kris's segment on the channel where we get a little bit of a bearish argument, or at least a skeptical argument around NVIDIA. We had Steve talk yesterday about the bull case for NVIDIA. What did you see in the earnings, Kris, that is freaking you out a little bit about NVIDIA?
A couple of things. Number one is that their forward growth is already starting to slow down just a little bit. Yeah, they'll try to say like, hey, we've got this issue, we got that issue, but overall, their growth picture is still really, really good. It's just that now you're starting to see chinks in the armor. And then on top of it, when you look next year, you're not going to see that tremendous growth that we had this year. So a lot of demand was pulled forward. I think Jensen at one point actually said like, there was just so much demand. We were having a tough time keeping up, and our suppliers now are finally catching up. So the question is that really the case where suppliers are catching up, or is demand kind of just starting to kind of scale back slightly, And if it's scaling back slightly, do you kind of want to take the chance of being in a sector that's slowing down with expectations that are already really high?
Do you think the market has priced in slower growth already?
I don't think so. It's actually going to depend on the sector that we're talking about. Like right now, this is the thing that really does worry me, especially if you look at how the business is for semiconductors. Semiconductors tend to trade, at around between a 10 and a 15 multiple. Sometimes if it gets overextended, it'll be, it'll go between the 15 and 20. But I'm telling you this right now, the forward multiple on all the semiconductors is way past this. It's 25 multiple right now. And yes, I understand that the AI wave is here, but semiconductors, they can be cut back at a really fast pace if earnings don't end up the way that they are. I mean, eventually a lot of their main driver of growth has been spend from the hyperscalers. So if the hyperscalers even remotely consider cutting back a little bit, you're going to see these guys get sold off. We might have another good year though. I'm not saying, like this is the end, NVIDIA is going to crash. But the thing is, the chances of NVIDIA not going anywhere and going down are higher than it rising to the $200 amount. So question then is on the hyperscalers.
if they're going to keep spending money and not necessarily reduce it, the bear case is that they start to reduce it more. Do you think the AI ROI for the Googles and Microsofts materializes, or do you think it doesn't, and therefore they stop spending on CapEx?
No, I mean it's materialized. Otherwise, their cloud revenue wouldn't have been growing as fast as it's been growing. I mean, if you look at their cloud revenue, it's still really up there. The question now is, a lot of companies, are they going to be cutting back? In which case, now demand for all these AI related services and workloads, are they going to be cut back? In which case, Google on a forward basis is going to say, you know what, maybe we need to cut back a little bit on CapEx. That's the real question that we all kind of need in 2025. You know.
Okay. So yeah, because from the guidance at 32.5 billion, it looks like they're only getting more and more spend. So your argument is somewhere in 2025, that quarterly uptrend, like maybe let's say one quarter they do 34 billion, and then the next quarter they say, hey, we're doing 31 billion. That would be the first quarter you see a real quarter-over-quarter decline. That would be telling you that CapEx spend is probably starting to slow down a bit.
Yeah, and it's going to be a double-digit move down. You know, that's the part that I think people are going to have to come to terms with, and it's not going to happen right now. It's going to be more visible probably after the first quarter of 2025. But we'll see what happens, man. There's competition there that's coming up too. You know, it's not like a lot of competition, but it's up there. You know, if the economy sours, that's another thing that could impact them on a multiples basis. So right now, everything is flying. So I don't necessarily think I would want to buy into. What do you think of the $50 billion buyback? See, the thing is, if this was like a $500 billion company, that $50 billion buyback would be tremendous. But it's $3 billion at this point, the market cap, right? So
3 trillion.
it's a 3 trillion. So it's a drop in the bucket if you think about it, compared to what the valuation is, right?
What price does NVIDIA get exciting for you then?
You know, I don't think necessarily it's a price thing at this point for me. I think you have to find out directionality. People need to focus on, one, on valuation, but two, on like directionality of their core business. Like, what is NVIDIA's core business? Their core business is design chips, send them to TSMC. TSMC makes them, and they sell them to these guys, and NVIDIA gets money, right? So the key here is, if their main product starts to get, one, commoditized, and two, get, you know, like demand goes down, that means that forward revenues are going to come down. So I think a lot of the pictures that have been painted on NVIDIA are very rosy pictures. And if you look at NVIDIA on a forward basis, right? Like, let me just pull it up real quick, because I think this is an important thing to look at. 1 second.
Thank you, everybody, for being here today. We'll have TJ on in a bit. Doug says, yeah, that 50 billion is almost an insult. I feel like Jensen has sold more than that from his personal stash. I think Jensen's worth like 80 billion. That's his net worth or something. But he's definitely, oh, sorry. No, 109 billion. I was off by 29 billion. It's 109 billion. Okay. Intel's running today because there's a news report that they're going to split up the company. That's why it's up 7% right now. So
take a look at this. So these are the growth estimates that are baked in right now for NVIDIA. Okay, you're looking at 102% growth this year. Next year they're going to come down to 38%. The year after that, about 20%. Okay, now EPS, of course, is going to be going up because, one, they're going to be earning more money, but then they're also going to be using those additional earnings to buy back a ton of shares. But even on that basis, you're looking at a forward PE of 26 in 2026 and then 22 in 2027. So you're basically paying like 2028 prices where the semiconductors usually trade today. So,
yeah, but is that the worst thing, to pay that much of a premium for the behemoth that is NVIDIA?
I don't know, man. I wouldn't want to pay that much. You know,
I mean they're the epicenter of AI. If we believe in AI, I mean, okay, so let me get your thoughts on the ChatGPT, $100 billion valuation. How is that not bullish for NVIDIA?
Let me tell you.
Or do you think that's a bubble? Do you think the GPT valuation?
I think it's GPT is a bubble, man. Not that. I think OpenAI has definitely got like long-term future value. But I think this is like a Chamath story where the guy is overinflating possibilities so that this way he can cash out. You know, I don't know. I'm very skeptical of how much I want to pay for tomorrow's value. So if you really are a hardcore NVIDIA believer, and by all means, if you are, you know, good luck to you. But I think right now, if you're buying NVIDIA, you're going to be sitting on dead money for the next 3 years. Or 4 years.
Wow, that's a hell of a take, Kris. That's a hell of a take.
Yeah.
So you think NVIDIA waffles between 100 to 120 for the next 3 years?
Probably. Yeah.
All right.
I'm just saying on a multiple basis, that's what it would be, right? Unless next year they somehow sell even like crazy demand again. I see the demand starting to slow down, in which case eventually they're going to get to a more natural growth rate, about 10%. And if the AI thing doesn't work out and people start cutting back on it, they might actually go into negative. I mean, what happens if revenue goes negative for NVIDIA?
That's not going to be good. That's not
right.
Yeah.
So if your valuations are so extended out, you need to keep that in mind. Now, here's the thing. You don't have to listen to me. You don't have to be a fundamental investor. You could just say, you know what, screw the fundamentals. I just like the company. I like the sector. This is where I want to go. Buy into it. Go ahead. Not really a thing. But I would say if you are going to do that, understand that you are taking risk. So buy some puts to protect yourself, because if there is a correction, either in the general market or in the demand of AI chips, especially some of these people, they're on like 400%, 500% gain. So don't be greedy and be like, no, I don't want to sacrifice like 5% of my top line gain because, it's like, oh, bro, if you're driving a Ferrari around, just buy some fucking insurance. Damn it, I shouldn't.
All right, let me get your perspective on some other stuff. And Kris, I think Tom Lee's about to be on CNBC. We can watch his segment together for 5 minutes.
Yeah,
he'll be on in a minute. SoFi, any thoughts on this one? Is it attractive at $8? With the rate cuts coming, is there any inclination?
It's just a bank, man. I'm good. Do
you think the rate cuts are at least bullish for the bank?
Rate cuts tend to actually be good for banks. I mean, rate increases are usually good for banks because now what happens is the money that's in their deposit, they can use that to arbitrage between things. So usually banks don't do that well when interest rates get cut, right? But I don't know. I'd really have to dig into their loans, because like one of the things that always was one of the apprehensions with SoFi is they have a lot of personal loans on their balance sheet. And those personal loans, if the economy does go south next year, what are the chances of some of those loans going bad? In which case now, and SoFi has to recognize those losses. Now, the thing is, from what I've seen and heard, SoFi does really good on issuing its personal loans, making sure that the credit quality is really high.
Which is why the rate cut might be bullish, because they could just issue more of those loans, essentially.
Right. But the problem that you run into is that overall the entire sector might end up taking a hit because of delinquency issues, in which case now the price could come down. So I'm not overly optimistic on SoFi. I think there's better opportunities out there, than SoFi. So
CrowdStrike. Any thoughts in general about their recovery since the incident in July?
Yeah, I think they're good. They're good. They're going to come back strong. I see CrowdStrike everywhere. I work in tech. Endpoint security is a really, really big deal. And the number of endpoints is just going to continuously grow every year. Their competitors out there are going to try to come up with products, and snipe at CrowdStrike for now, as long as the market is kind of perceiving some weakness on their part and saying that, people need to diversify. But everything that I know, most vendors, this is a one-off thing, and they're just going to like chalk it up to, well, this is what happens, and they're just going to let it go.
So you don't think there's this massive like $5 billion lawsuit coming that's going to bankrupt the company? Or
no, not at all. It'll do well over a long period of time. So I think right now is a good opportunity to add to CrowdStrike, and especially when it was down, it was even better time to add. But I would just be cautious on it. I think this is a long-term growth company, and if you need, and the thing is, like, this is the one-time valuations. I wouldn't necessarily just use that as the key metric. I'd say just keep an eye on the growth of cybersecurity and go from there.
Okay, the cruise lines, are you still bullish on those? Carnival up 1.1% today.
Absolutely. The story for Carnival, for Norwegian, maybe not as much for Royal Caribbean, is very simple. It's a play on deleveraging. And basically returning to cash flow. So those, as their cash flows have returned back to normal again, they're going to utilize that to pay down debt. And as you pay down debt, your equity value goes up. So Carnival is going to be in a good place. Same thing with Norwegian. You know, one of the reasons why they've been sold off is because they took on a lot of debt during COVID. And yeah, over time, they'll do well.
Okay. And then final question on this. Any sectors you want to be looking at to position yourself for the rate cuts over the next couple of months? I know you like REITs. I know you like cruises. Is there anything else that's interesting here?
I would say we kind of need to step away from just general stock and instead look for opportunities in preferred shares and also in corporate debt. Because the thing is, like, if you look at how debt works, there are a lot of great companies who have preferred shares out there that are trading way below par because their current capitals, the current cost of capital is actually pretty expensive, which has kind of disrupted their business model. So let's say right now you had a margin on your business of about 5%, and now interest rates have gone up to 5%, which means now most of your income is, instead of going towards shareholders, is actually getting recycled into debt holders, right? So into the bond market, into the preferred equity holders. The key here is that because of that, it looks like you're, from a net income perspective, at a net loss. So a lot of the people who are looking at that saying, oh, this is a high risk company, I want to dump it, I don't want to be in this. And so a lot of these asset classes, especially with bonds and preferred equity, have been oversold. And the opportunity for us is that when it comes to preferred equity and bonds, if you buy them right now at a discount to par, you'll get the capital appreciation, but then also you'll be able to lock in a good fixed return for a period of time that you get it. So it's almost like a double benefit. And then one more benefit is that, let's say we do have a recession and the Fed cuts interest rates really, really deep. That means that now the cost of capital for a lot of these businesses is going to go further down. And then you're also going to have people chasing yield, which means that the par, the preferred equity will go closer to par again. So that's where I would be looking. So instead of looking at just general equities right now, I think it's time to look at preferred equity, and it's time to look at corporate debt. I mean, I have had a lot of positions in that over the last probably 6 months that have been real winners for me, but I think that there's still a host of other things like that are worth looking into.
Is Palantir still too expensive for you?
Yeah, man, they're riding the AI hype wave, and I'm not I'm not in the AI hype wave. I know there's a lot of people that are super bullish on AI, and I commend you guys for staying the course. My biggest challenge right now is that I don't see finished products that are utilizing generative AI to the degree that a lot of people are thinking, you know. And I think whatever, Palantir did a really good job last year of getting their product out there and into the market. I have a tough time believing that they'll be able to keep that growth acceleration that they've had and maintain that next year. And if they aren't able to maintain it, it's going to take a dump, and it might get back down to the 20s. You know, the other challenge that Palantir also has, remember, is that a lot of their net income is coming from their cash pile. So as they issue shares, instead of paying employees in shares, what they're doing is basically, I mean, instead of paying employees in cash, they're using a lot of SBC. And at the same time, they're just hoarding the cash and then deploying that cash into short-term treasuries. And now it looks like, look, they're net income positive. They're great. And yeah, it's great right now, but you know, next year when interest rates come down, you're going to have to replace that high margin net income, that's 100% net income, with something else. So how are you going to do that?
Well, their margins are going up, which theoretically should be able to allow them to get more on the bottom line, even if they're not getting it from T-bills, right? They have almost 40% adjusted operating margins. Plus, if we get a low rate cut environment, theoretically businesses should spend more on software.
Yeah. And that's a really good argument to make, you know, that, hey, this could be a real thing. So there might also be some AI fatigue as well. So I'll see. A lot of this stuff is very fluid. I'm not saying I have a crystal ball that's going to be 100% right. Like, you should just do this. Like, no, I mean, dude, I've been wrong on things. And Palantir is probably one of my bigger things that I've gotten wrong. I've also gotten Snowflake wrong, where I thought demand for Snowflake products would be.
Yeah. What do you think about those earnings? How do you think of that one?
it's sad to see where Snowflake is right now, but that's just how the world is.
I think the Databricks thing is really getting to them at this point.
Dude, it's bad. When you have a competitor that's able to reach out into the capital markets and basically mess with you the entire time, and you are a public company, they're not, dude, it's sad. It is sad the level of like, what's the word, leverage that Databricks has in messing with Snowflake. And I think the new CEO hasn't necessarily put the confidence back into Snowflake again, you know.
Right.
And also there's some disruption in terms of technology too. Like I wrote a big post on Apache Iceberg. I don't know if you remember seeing that on Twitter.
A while ago. Yeah.
Where basically the technology that Snowflake has that basically gave them a lot of leverage in terms of their clients. Some people can like move off of that, and that's going to be a big thing where now Snowflake is incrementally going to have to replace that revenue, and it might actually slow down. So we'll see what happens, man.
Okay, so question for you here. Snowflake hasn't done the best. There's competition issues. Palantir, you think, is too overvalued. If you had to buy one, Snowflake at 115, Palantir at 32, which one?
Neither. I think I'm in technology. Look, I'm in tech fatigue at this point.
Kris is like, okay? I'm buying REITs.
I'm in tech fatigue. I need to maybe stay away from general tech. You know, like I don't think I have a good track record with tech. I think I think
probably you have a decent track record with tech. I mean, Meta, Amazon, you got those at low. I mean, dude, a lot of people didn't buy Meta at $80. You did, you know. So I think you understand valuation. You just don't like the valuation on some of these tech names.
The thing is, when it comes to the sentiment around the technology, I should have picked up on the Palantir tech, you know, like growth in AIP, because I think, and this is the part that sucks. Me and you and Coach Trap, we spoke about this at great lengths, that Palantir really needs to do more conferences, and they need to do the thing like boot camps and stuff, and that would really help out their growth level, and which it did, right? The thing is, though, I didn't realize that, hey, they're doing it and it's actually paying off. I mean, you guys stuck with it, and so you did well, and you deserve the gains off of that. But I think I missed the boat on it, and right now I just wouldn't feel comfortable buying it at these valuations. So,
all right, let's get a reaction to Tom Lee. We'll get your thoughts on it, Kris, and then we'll get you out of here.
Will September bring for stocks as we get ready for a jobs report and possible Fed rate cuts? Joining us now, Fundstrat Global Advisors, Head of Research and CNBC contributor Tom Lee. Tom, great to have you with us. NASDAQ, I should clarify, will only have gains if it continues its strong session today, so it won't be significant net gains. Tom, great to see you. Long time no speak. First and foremost, what's your reaction to how the market is processed NVIDIA's numbers? It of course, fell initially in the pre-market. Yesterday morning, it was doing all right, and then it did close more meaningfully down by the end of the session yesterday.
Well, I think NVIDIA is one of these stocks that has become part of like a stock market lore. Almost everyone has a position, and I don't think the results and the earnings changed anyone's minds about AI and the central role it's playing in both global productivity, but also NVIDIA's role. But I think the sell-off tells you that a lot of good news was priced in. I think that's why the stock fell. It didn't take the broader market down. I think that was kind of a positive outcome. And I think it just shows you that there's room for a lot of rotation. And I think that it's revealing that small caps is one of the groups benefiting from that rotation.
Let's talk about that rotation, Tom, and the extent to which there's still a long way to go if you're looking at the valuations of some of those sectors that haven't done so well in recent months and years, or whether things have bounced enough across the board that you start to get a little bit concerned about valuations for the entire market, not just the NVIDIAs of this world.
Valuations are definitely something our clients are asking us about because, the equity markets have been rising for several years. But the idea of a rotation, I think, is grounded on a couple of things. One is that the Fed's rate path is lower, and that benefits cyclical stocks and small caps. And we know there's also a lot of cash on the sidelines, and investors de-risked because of the yen crisis and just general concerns about the summer. And so I think the NVIDIA results plus the Fed in September is really the catalyst that is going to get some investors to actually follow through with the rotation. So I think we're early because, for instance, small caps, I know people think they're expensive, but the median PE of a Russell 2000 stock is still 10.7 times forward earnings. That's compared to almost 17 times for the S&P. So the small caps have a lot of room for multiple expansion.
But Tom, do you want to just own the index? I mean, there's a lot of not great companies when you talk about small caps, you know, in terms of just not just their indebtedness, but any number of other metrics you might want to use. Are you telling people they should buy individual stocks or just buy the index?
I think it's both, David. We have a lot of portfolio managers that actually focus on small caps, and they're finding a lot of really attractive individual ideas with good earnings growth. But I think there is a misconception about the Russell 2000. I know there's many non-earners, but over 70% of the non-earners in the Russell 2000 are biotech stocks. And I don't think they're meant to generate earnings. And if you look at Russell 2000 earnings in aggregate, it rose 18% in the quarter, and it's projected to grow 39% in the third quarter. So in aggregate, it's not a bad index to own anyways.
Tom, I wanted to get your thoughts on the broader economic data. This morning, PCE came in line with expectations. We had GDP yesterday at 3% versus the 2.8% estimate. As we start to get ready for an interest rate cut, how much is already priced into this market?
We'll never know how much good news is priced in, but I think there was a lot of encouragement in both of the data points you point out. PCE core came in at 0.16. The upside driver there was actually financial services, which is because the stock market's up. It's showing up as inflation in PCE core. The year over year is staying at 2.5, 2.6, which means most people were thinking that year over year would actually tick up. They had negative revisions for the prior months. And on the inflation side, a 2.8 for UMich 1 year, that's pre-pandemic levels of inflation. Consumers are always around 2.8. So I think this is giving the Fed a lot more green light to cut and focus on keeping the labor market strong, which means it's essentially acting as a Fed put going forward.
Tom, stepping back, you've obviously made some fantastic calls over the last couple of years. I'm interested in your take as to why higher interest rates didn't derail market valuations in a more pronounced or prolonged way. And I guess linked to that is the extent to which actually now when rates come down again, will it really benefit the market as much as maybe some people are expecting?
Yes, I agree with you. I think most of us thought that if the Fed raises rates at the highest pace in history, we should have either had a heart attack in the economy and an economic recession plus a stock market crash. We did get a huge stock market correction, but we got a soft landing. I think parts of the economy did go into recession, Wilfred. We know housing activity is recession level. The auto industry is essentially suffering from recession when you look at delinquency rates on loans. So I think there has been real negative consequences of high rates, and we know it's stressing the low-end consumer. I think the CEOs are the ones that didn't get caught in this because the Fed signaled they were going to raise rates dramatically. That means no company did CapEx in the face of that. Many companies cut inventory. They raised a lot of cash. I think businesses prevented us from having a recession because they got cautious. And I think that's why when the Fed starts to cut, there is going to be a positive impulse because, one, there's pent-up capital spending. Companies aren't over-levered. There's going to be IPOs. You guys talked about it, the dearth of it. That should come back. And as you cut rates, that's going to stimulate the consumer.
Tom, real quick, you mentioned the market multiple, the S&P, I should say, at 17. Are you expecting $330 of S&P earnings? Because that's what that implies.
Well, that's the median PE, David. So when I look at median, I'm taking the 250 of stock in the S&P, and that's at 17 times. I think in aggregate, the multiple is higher because the Mag 7 have a higher PE. But I think the median is a better way to look at market composition. And I'm comparing that to the Russell 2000 median, the 1,000 stock in the Russell.
Yeah, I wanted to make sure I understood that because that was a bit lower than I'd anticipated. Where are you on S&P earnings? Do you have an estimate?
We originally thought that 2025 earnings at the start of this year would be 260. I think it's tracking closer to 280. So it's not that the market is cheap on next year's earnings, because that would be, roughly 20 times. But I think that if we think about market breadth expansion, then we want to think about the stocks outside the Mag 7, and I think there's room for multiple expansion there.
Tom Lee, great to see you. Thanks for joining
Great to
us.
see you.
As we head
Kris, any thoughts on what he said?
No, I agree with him. I think that there's a lot of opportunities out there outside of the Mag 7, and people should be looking there for value right now. I think a lot of people have gotten used to like, oh, just invest in the Mag 7 and everything will be okay. And, it's not just about performing the market. You kind of want to outperform the market. So how do you do that? So you kind of, you find out where the winds are blowing and you move into that direction before other people do. So I think Tom Lee's absolutely right that there's a lot of value in small cap names. The key though is, do you want to just buy the index, or do you want to kind of buy, individually pick the one? So it's all going to depend on your personal perspective on how things work out. For me right now, I'm rotating out of a lot of things, and instead just one, it's just I'm going to still be in the markets, but just be in a different part of the markets that give a good return. So let me give you a good example of something, what I mean by that. And it's just one second. So, okay. So this is Microsoft. Okay. Microsoft is a great company doing extremely well for the past year, right? And right now it's trading at a 35 PE. Well, you could at the same time buy something like a preferred equity like BPYPM, which I've had for a while now, right? And if you look on a year basis, you can actually see that, hey, BPYPM underperformed for the last year. But if you go on a year to date, you can see that Brookfield Property Partners, which is an unprofitable REIT that's a preferred equity, is actually outperforming Microsoft.
Why?
Right?
Why do you think it's outperforming Microsoft?
Because it works in a different way. So preferred equities are more tied into security of the underlying company and the health of the underlying company rather than its growth potential. So if you have something that's is trading way below par and it's a yielding asset, it's actually going to do well. Because now what you're going to have is rate cuts coming in, and now people are going to be chasing safety and chasing yield. Yeah. So one of the safest companies you could be in, Microsoft, you would only be up year to date 11%. But with this preferred equity, you would be up 30% plus another 6.5% by buying because they issue quarterly distributions in the ballpark of about 3% per quarter at par. But right now, because it's trading under par, or it was trading way below par, you were getting like another 6%. So technically,
Microsoft is not that safe unless they grow, right? Like if they don't grow, they're not safe.
Well, I mean, I wouldn't call them not safe. I would just say that they would underperform other parts of the market, right? So I think that's the key. Like, do you want to invest in companies just because you want to perform like the market? If that's your goal, then you should just buy the S&P 500 index. But if you're trying to beat the markets, you got to look for opportunities like this and rotate in and out of sectors that give you that value. So
right.
Yeah.
All right. There we go. Chris's Twitter in the chat. Thank you, Kris, for hopping on. I know it's been a rough couple of weeks for you. I'm praying for your father-in-law and family and hoping it goes well.
Appreciate it, man. Thank you.
And yeah, we'll see you soon. Thank you, Kris, for joining. Appreciate it.
Later. Take care.
Later. All right. That was our segment with Kris. Well, we got someone else who's coming onto the show. So we get two guests back to back on a Friday, August 30th, 2024. You're listening to KISS 101.5 FM. I always wanted to. You're listening to the Amit YouTube channel. Thank you, everybody, for being here. Ladies and gentlemen, we have two special guests actually joining right now. Not one special guest, two special guests. And the second special guest looks a little cuter than the other guest. Who is this, TJ?
G-Money, baby. G-Money.
Who is, I think his name is Gavin, right? Who is this?
Yeah, I call him G-Money.
Oh my gosh. Okay, so hold on. Why did you get a dog? Where did this come from?
Kristen, dude, I thought she was looking at purses or shoes, and this was the next purchase, dude. She's a cereal shopper.
Okay, but the thing is, your wife wanted the dog.
Like a full-time career.
You're probably going to be the dog's best friend, even though the wife wanted it, right?
Oh yeah, no, but whenever she's here, she's out running errands right now. When she's here, she know he already knows who Mama is, and so I get leftover love, and I'm cool with it, dude. The only thing that sucks about getting this little dog is it was like Duke, and then it was me, but this guy already slid in, so I'm like I moved down the rung on the ladder.
Yeah.
And you know, it is what it is, man. When you're the dad, you got to take what you can get. You know what I mean?
Can we see him a little bit more? Can we get a close up of him?
Yeah. So he's a Cavapoo, and he costs about as much as half of one of my horses.
Oh, so this is an expensive dog.
Yeah, it's about $5,000, dude. Fucking ridiculous.
Oh, he's so cute, dude. He's so cute. Wow, that is a luxurious dog.
He's cool. He's got the unibrow going, dude. He hasn't been groomed or anything. He's too young. He's like 12, 13 weeks old. So the vet wants us to wait like a month or so before doing all of that stuff. But he's gonna be the new stock picker, dude. He'll be just as good as we are, bro.
He'll be better.
We're all just trying here.
He'll bark when you mention the name, and that's how you'll know that he wants it.
He wants to look at Chewy, the first stock of the day.
That's a good one. That's a funny one.
Dude, imagine going on with Chewy.
Imagine you start wheeling Chewy, and it like is your best winner, and it's like the only reason you got into it was because you got a dog. That's hilarious. How big could he get? Could he turn into like a really, really big dog?
No, like 14 to 15 pounds. He's what's called a Cavapoo, a poodle, and then I think the second dog is a Cavalier or something. I never heard of the other dog, but my wife, bro, she has her way of finding shit that makes sense to her. And we literally fought about this dog before we got him, but I'm cool with it now because he's here. But when I found out the price tag, dude, like legit, I was fucking pissed. I mean, like, it's like 700-800 shares of SoFi, baby. Like, what do we do?
TJ, given how your stock portfolio has appreciated this week, I think 5,000 is not the worst for a dog. You're up a couple houses this week, so that's awesome, dude.
Man, it's cool. So let's start the show. We didn't present our scoreboard, and there's been some major changes to the scoreboard, Amit, that maybe you're not even aware of. So this is going to maybe be a little bit of an eye-opener for you as well.
Okay. So if you are new to the Market Open, this is the segment I do every week with TJ, the Wheel Deal. TJ has his own YouTube channel and Twitter. I'm going to put it in the chat right now. We have a public portfolio. We've been doing this for about 5 months, working with $1 million of capital. TJ's full portfolio is closer to 7 million. So we're using 1/7 of that. And we've collected a decent amount of premium. This is the scoreboard on how much we've actually made.
So that's where we're at right now because we made some moves, right? So essentially, we've collected 237,703 in net premiums collected. The total outstanding collateral, this is for cash secured puts, is 1.187. Open P&L on shares owned is 10,000 to the good. So when you add all that up, almost $250,000, Amit. Is that pretty crazy or what?
That's not bad, dude. That is not bad. In about 5, how many months? 6 months, 5 months? That's basically 30 grand-ish a month.
Yeah, all I have to do in a little bit is pull up Shopify because that was our first trade on the channel,
right?
For the project, so we can pull up Shopify and it'll say when we sold those cash secured puts, and that's when the project started.
I'm pretty sure it's April, so it's basically been 5 months.
Yeah,
April, May, June, July, August. Yeah, 5 months. Yeah.
So now keep in mind, guys, this is collected premium. There's a big difference between collected and realized premium. Right. When premium comes through the door immediately, whenever we type the money, when we agree to buy shares via a cash secured put, they give you that money immediately. But it's whenever you close it out, that's when you realize the win. And we've realized a lot of wins along the way. But a lot of this premium is outstanding based on a couple of really, really big trades that we're going to introduce that weren't on there yesterday because I messaged Amit and I was like, hey, I got a lot of money tied up in this company called SoFi. Y'all may have heard of it. And it's about $700,000 via cash secured put at $7. And I was like, it's already printed and there's a lot of time left on the clock. I can go grab the rest of that money. But what if we took that money and put it into something else? I don't know, like CleanSpark, TSLL, maybe BITF. What would that look like? Tying up the same capital for the same amount of time left in the contract. And we were able to get all of this premium. Yeah. So we reallocated the funds. We even lowered the collateral requirements for doing so. And we were able to grab like an extra $50,000-$60,000 in premiums for the portfolio.
Right.
So those are big decisions because we went from a super sleep easy trade SoFi at $7 for January. And let's talk about the trades that we brought in for doing that. But I just want to peruse this. So Hood's been good for 32,000. Shop was 74.45. We're not in that one. TSLL has now generated $101,000 in premiums.
And again, for those that are new to this, when we mean premiums, TJ and I aren't just buying and holding. We are selling options, whether they're covered calls or puts on these positions. So when we say premiums, we're using the stock to sell options against it. And whatever we collect from that and recognize that ends up being the net premium from the stock.
Correct. And then HIMS was good for 72.67. NVDL was an earnings play from the last quarter. It's the ETF leveraged on NVIDIA. We got 685 there. We lost 38.15 on Path. So this is my deal. I wanted to gamble on Path and it did not work out. NVIDIA, we currently own 500 shares and we've collected and mostly realized 13,906 in premiums thus far. Snow, we've got 39.20. There's an open trade here on Snow. Then we got BITX. We own 2,000 shares there, and we've collected 27,600. Meta was good for 12,905. There's nothing active right now. American Airlines is 5,000 shares owned, and we've collected 10,625. CrowdStrike, there's an open position there. 300 shares owned, 4,900 in premiums, and then CleanSpark came in with an additional 19,000 in premiums, and that's how we got to the 237. The other 10,000 is capital appreciation because on the shares that we own, right now we're up about 10 grand collectively on those shares that we bought through this project. So
Not
how
bad.
do you feel, Nick? How do you feel?
I feel pretty good. I'm sure you feel pretty good seeing this almost get to 7 million. That definitely. What can you show the weekly? How much is it up for the week? Imagine it's a couple hundred or something. Yeah, 250. That's a lot of money. 250 for the week.
Yeah, the month's been pretty flat. Remember, we had this over here, that Bloody Monday, right?
Yeah, but still, it's up 175 for the month.
But look at that Bloody Monday. So we've been able to get some of that back. But then the last 3 months gives you a better indicator of, and this has been our project. So we've gone through highs and we've gone through lows, and then we're coming back up on a high again. So you just gotta stay steady, man. Here's the year to date. So it's nothing like super crazy because there's a lot of money tied up on stocks that have underperformed the market. That's the reality. So whenever your stocks are not running, that's this quote unquote opportunity cost that a lot of people talk about. But then if you start looking at the last year, well, it's not bad, right? 25%. That's probably in line with the market, maybe a little bit better. And then all time, this is going on about 2 years in the portfolio, up 35%. And I got my ass kicked early on, guys. I was selling a bunch of puts on garbage stocks that not only were not profitable, there wasn't even a path to profitability in play yet. Like, y'all think Neo's bad? Dude, I was on shit like BNGO, yo. You know what I'm saying? Like
Clover Health, all of them. Yeah.
I was now there's one Clover that I have in another portfolio, Clover Health. You remember that one?
Yep.
It was another Schmoth play. Lost my ass on that one, but I held on to 20,000 shares. And it was like a biblical thing, dude. It was like Jesus told Lazarus to come out of the tomb. And somehow, dude, it was like the Phoenix and Clove like came up, and I made money on that stock.
That's hilarious.
That dude, BNGO, Sands, Ideanomics. Got my abs. I just got my ass kicked.
Well, it's not just you. Everyone in 2021, 2022.
I went into the meme craze a little bit. I was a victim of a little bit of the meme craze. Everything is short squeezing for absolutely no reason, no fundamentals to speak of to really support anything. It's just when shit was going up and to the right. And, so I was a victim of that. And then I was like, okay, that doesn't work. Let's go do the Amazons, the Teslas, the shit that we know is going to be here for the next, theoretically 20, 30, 40 years.
Right.
And that's when the portfolio started turning around. So first
let's
thing we need to do, Amit, don't want to interrupt you, but the first thing we need to do is we need to buy 500 shares of Palantir.
Oh, yeah. I was going to remind you. Yep. There we go.
DCA. So for those of y'all that don't know, this is the entire Palantir position. Got 21,000 shares now at 15.41. I'm trying to average up for the simple reason that I want to get the 5,000 shares here that are in jeopardy because I got $12 covered calls that I got caught in a really big way with my hand in the cookie jar. Mind you, I bought these shares at like $6, so it doesn't really hurt my feelings that much. But I don't really want to lose these shares. But I have a plan to deal with this sometime late September. But let's just say my plan doesn't work out and these shares were to get called away from me prematurely, because this is a win for the person on the other side of this contract. I want to just go ahead and just buy the shares again. So that's the idea. And I want to buy 500 shares a week until I get to my 5,000 shares. And then if I'm able to salvage these, well, fantastic. So that's kind of the logic behind that, guys. So what I want to do first and foremost is buy 500 shares.
You're on the contracts.
And then I like to...
TJ, you're on the contracts.
Oh, shit. Yeah, that wouldn't be good. Huh? I don't want to buy those. Thank you, Meg. Good looking out. So I want to do 500 shares. I don't give a shit what the price is. It's irrelevant. I know that you want to buy them cheaper, but bottom line is I want to own the shares. And 10 years from now, I don't think it'll matter too much.
No, I agree. That's my mentality with Palantir. That's my mentality.
So I scooped them up right there. So now we're there. So now theoretically, this thing should say 21,500 shares. And we're getting there, and we're getting there. So I averaged up yet again. The idea is I would like to be under 17 when this is all said and done. So I have to do some math there. If Palantir were to dip to like 28, as an example, I have it in my journal that I'll just scoop up the rest of the shares at that point and call it good.
Yep.
But if it still hovers, because Palantir has been very, very resilient, as you well know.
Dude, it's been 3 weeks at 30 above. It's been fucking resilient, dude. It's been incredible.
It is. So, it is what it is. And I'm not selling covered calls on those, by the way.
Yeah.
Like on those 1,500 shares so far, you'll see that I have the cover calls here at 30 and at 12 for the end or beginning next year. But these 1,500 shares are unencumbered, and I'm going to leave them that way probably until the next earnings report. Because I have just learned some lessons, dude. Palantir, when she wants to run, bro, just let her run. You can't stop that damn horse, bro. It's like a wild Mustang. So it is what it is. And that's a teaching segment for you guys is the stock is the horse and you're the jockey. You need to learn how to ride your horse. Like you're gonna I ride, and I used to gallop racehorses as a child, and then I team rope and stuff. And you got to learn the tendencies of your horse whenever we're talking about an actual live animal. And I think that your horse it's no different. You got to learn, well, how does it run during earnings? What happens on good earnings? What happens on great earnings? What happens on shitty earnings? What happens on a short report? Learn your horse. Learn your horse and then position your portfolio. If you're selling cash and puts and cover calls or buying calls and puts as hedges, like learn your horse so that you can position yourself to ride it the best way possible for the results that you aspire to get. Hopefully you guys can get that analogy. It really makes sense to me because I deal with those live animals, and dude, they all have attitudes, bro. They all have personalities. Like you gotta learn how to speak their language.
Your dog will start having the same personality eventually as well.
Definitely. So which one do you want to start with, man? We got a lot going on. I'm thinking NVIDIA.
I want to let's get SoFi out of the way because we got a lot of stuff going on with SoFi.
I do.
And we sold some stuff to do other stuff. So how are we navigating SoFi?
So SoFi, we're up on the shares. Remember, we're down a couple $100,000 a few weeks ago, right? So
now you're perceptually a better investor just because you're up on the shares, right?
And that's the thing, dude. Like, guys, you gotta keep things in perspective, dude. I'm the same guy. SoFi just happens to be cooperating now, but I stick to the strategy. I feel like 3 to 5 years from now, this thing's going to be a juggernaut. That is what I believe. I know Kris Patel's not in that camp. But you know what? I don't want to invest in the fucking cruise lines because they're not American companies. If anything happens, they ain't getting a fucking bailout. That was the big deal during COVID, right? That's why they tanked, because all the money was coming from the government. It wasn't going to go to them because they parked their ships here, but they don't actually have any corporations that are in this country. So I made money on the cruise lines, but I'm like, I don't want to fucking play that game because if push comes to shove, they're fucking out in the cold. They're not like the airlines. That's why if I want to get a not very profitable industry in a sector, I'd rather run with American Airlines because they'll get government money, whereas the cruise lines won't get shit.
Yeah, it's different perspectives, and that's
on a different level, right? On a different level. But what I'm saying is he doesn't like SoFi, I don't like some of his plays, and that's what makes a market, guys. It doesn't, oh, I think he's a shitty guy. It's none of that. It's just we all have our favorite sports teams. The NFL starts next week. I'm a Cowboys fan. This is our year, bro. Like, we've been saying that shit for 30 years, yo.
Cowboys is a sad story, dude.
And
It's a
I
very
highly
sad.
doubt this is our year. You know what I'm saying? But I'm gonna be drinking the Kool-Aid, bro. I got the cap ready for game day. We already got a little blanket that we're gonna put on the couch when the Cowboys game's around. We're gonna light the fucking candle. Whatever we gotta do to cheer Dak Prescott and company. But at the end of the day, it's just a game. You know what I mean? It's just a game. This year we're dealing with real life money. But SoFi, we closed out cash secure puts at 7. Y'all remember there was 1,000 of those there?
Yep.
They're no longer there. We still have the 1,000 ones at 8. We've got the covered calls at 9 for January. These were at 750 expiring today. I had rolled those out for break even on the last podcast, Amit. And then these are the leaps. We got 1,000 leaps at 10, 1,000 leaps at 7, 1,000 leaps at 5. So pretty big position still. And I'm not doing anything with it covered call wise. I'm really studying the technicals. I've actually got a podcast set up with 4 technical nerds over the weekend. I don't know if we're going to do it on camera. This is because they're not those people, but they're really good at it. So they're going to school me on the technical side of this thing and where it's at, because there's a gap allegedly, and I haven't been studying the technicals much. There's a gap that needs to be filled from the time that they did the convertible notes.
Right.
And there's only so many hours in the day for me, right? So I rely on people that do this kind of shit. And so they're going to school me on that. And I kind of want to wait for that gap to fill before I consider selling more covered calls on it.
So ultimately, there's 150,000 shares. You have some covered calls. You have a bunch of leaps, and you have $8 puts. And that's pretty much the position right now.
Correct. But there's only 500 covered calls when I could still sell another 1,000 on the shares, and I could sell covered calls against 1,400 more leaps. So there's plenty of covered call money that I could be bringing through the door. But I'm choosing not to because I've been rewarded with capital appreciation in lieu of the premiums. Now, mind you, these are unrealized gains versus realized gains. Y'all all know how I feel about that. But I've already got covered calls that are a pain in my ass right here at $9. And I'm not really trying to add to it, if that makes sense.
Yeah, that's fair.
So, it's just kind of like you've had your batch of Palantir amid, and you're like, oh, do I sell covered calls or do I not? Because it's just like, there's only so much that you're willing to deal with in life at one time, right?
It's annoying. And when it starts running, this is what happened with NVIDIA for a lot of shareholders. It ran.
Yeah.
And,
So that's the thing. And then there's also, this isn't anything that I put a whole lot of stock in or value in when it comes to SoFi. But there's a thing called the short float, the percentage of the shares that are sold short. I think it's about 18 or 19%. So it's a pretty hefty amount. Yep. If those funds were to get caught, then they have to buy those shares. So it produces a bit of a squeeze and upward pressure on the stock. So if that would happen as well, I want to reserve the right. I want to have the right. I don't think that I would do it, Amit, but I want to have the right to look over here at these $5 calls, to look over here at these $7 calls and be like, holy shit, you're up 150%. Do you want to just take that money off the table? Right. So I want to have those rights. It's not an obligation when you're buying options. It's just a right. But I want to have that right to make that decision if I want to lock in a win, if that makes sense.
I agree.
So,
let's do NVIDIA. What do we got going on with this one? I think we have to make some moves on NVIDIA, actually. We have to.
So NVIDIA, we're obviously got caught with our hand in the cookie jar on the shares, right? But this was at 132, I think. And then I bought 200 more, brought it down to 125. So it's a position now that I look at on a daily basis because the dollar amount is pretty substantial. And then we've got cash secured. We're running a strangle. So we've got those shares for sale at 140. You were a little reluctant to do this last week, but I was like, well, if they get called away at 140, are we really angry?
Yeah.
And the answer was not really, right? Because we would have made money.
So we're up 99.6 69%. We don't really need to close it because it's probably not going to 140 today.
But it's also just only $5 to close it, right?
Right.
Because that's that. So I'm thinking we don't have to do anything. Let's say NVIDIA were to go on a massive tear and go to like 141, and those shares were to get called away because I didn't want to give back $5. Dude, I'm actually okay with it, if that makes sense.
Yeah.
Because I listened to a big portion of Kris Patel. And dude, it's not like he didn't make a lot of sense. You know what I'm saying? Like there are some it's like it's a beautiful piece of real estate. It's oceanfront property. Everything looks really, really well. But let's just say every once in a while an earthquake hits it, a hurricane hits it, etc. You don't know how devastating it's going to be to that piece of real estate, right? Yeah. And I feel like that's kind of what NVIDIA is you're going to have to pay a fucking premium, but you know that there could potentially be some sort of a crash at some point, and this is how bag holding is created, and we've gotten away with it because if we look at the wheel tracker, Amit, do you know what our cost basis is on NVIDIA? If you had a guess?
I think it's like adjusted 118, if I'm not wrong.
No, dude, it's going to be better than that. It's going to be better than that. I have a whole tab for NVIDIA. So our adjusted cost basis is $97.
Whoa, I did not know that. Okay.
Yeah, because when you sell puts and calls, and we do, we've been winning on NVIDIA for a hot minute since June. So we've done that, you know, over and over and over again. This is like our third or fourth round on covered calls as well, guys.
Right.
So we haven't just been sitting on these shares. And then I had already told myself if we can get down to like 90 on this adjusted cost basis, and if at any point these shares were to get called away, I mean, then I would say that that's a pretty successful campaign because, dude, you have to agree that buying the first initial batch at 132 was pretty ballsy and probably not the best strategy.
Very ballsy, yes.
So when you get away with implementing kind of a degen play, if you will, you have to be okay taking that win, you know? Like, so now I think it comes down to this. It comes down to this cash secured put. How do you feel about this? Because this is actually a winning trade for us right now. Do you want to explain why it's a winning trade, Amit?
Yeah, so we sold a cash secured put for $120, which means I was talking about this yesterday on the show. We agreed to buy 100 shares of NVIDIA at 120. I think we sold 5 of them, so that's 500 shares. And that means we need 12,000 of collateral, or 120 times
60.
Yeah, 120 times 100 shares times 500. So that gets you 60 grand. And we collected 1775 for that. So the market paid us a premium to say, hey, if NVIDIA goes below 120, you have to buy these shares. If it doesn't, you get to keep the premium and you get your 60 grand back, your collateral, and you don't have to buy those shares. But we are up 68% on those.
So the reason is because we have a break even of 116.45 because it's taken into account the 355 that we got paid up front. So even though it's below our strike price, it's still a winning trade because it's only $1.06 to close times 5 to close out this contract right now. We received 355. So we stand to make that difference because there's a lot of people that cannot comprehend that selling options is the only place, the only way you can actually be wrong directionally and still be right financially.
And I want to underscore what you just said right there. You can be wrong directionally, meaning we thought NVIDIA would be above 120. It's not currently. It's at below 120, 119.6. But given the nature of how much premium we collected versus how much we have to give back, we still can make 60% on our money. There's not a lot of businesses where you can be wrong and still make a profit.
Yeah,
on the collateral that you have, which is incredible. Whereas
on the other side of the fence, whenever you buy calls, you have to be right on the timing and you have to be right direction.
Yeah. So let's speak to this a little bit. So put buyers and call buyers got destroyed on earnings. Why did sellers, option sellers, specifically covered call sellers, not get as destroyed?
Because there wasn't a violent move. You know, like we sold these covered calls, and we go back to NVIDIA. There was a lot of volatility before the binary event, right? So whenever there's a lot of high IV, that means that the premiums are going to be really expensive. So it's very beneficial whenever you're selling options versus buying options. If you're buying options when the IV is very, very high, you're just not really being that smart about it.
You're literally gambling at that point.
Well, yeah, because you need an oversized move because you have to cover the premium that you paid. So it has to go above and beyond that. So it's got to be a huge, huge move. So initially it was kind of violent, right? Because I think that there was a flash crash to maybe 115 or something like that. I didn't follow it too closely. I know you were live when this was going on. But it kind of stayed in a range, and that range was about like 115 to 120. And I think it went up a little bit initially, but then it's just been range bound, like 115 to like 124, 125. So that's slow and steady is good whenever you're selling options because theta decay is coming off the clock. And then also the IV crush, somebody mentioned on the chat, that shit, if you bought options, I mean, it literally crushed you. For us, it's good because if I want to close this out, I have to give back less money, on the cash secured put side of things and on the cover call side of things as well. I mean, here I just got to give back a penny, and here I got to give back $1. Now, the other thing that's going to happen on these puts, Amit, is there's still theta decay that we can collect. You see that theta right there?
Till the end of the day, right?
And that's going to hit around 2 p.m. today, my time.
Yeah.
So if NVIDIA just stays here and does nothing, we could probably close this out for like 30 or 40 cents.
Yeah.
So that's, again, you're literally collecting like time and money, if that makes sense.
Is there any world in which you want to roll this, or you're happy with letting it?
Yeah, I think we definitely need to address it. We don't have to address it right now for a couple of reasons, in my opinion, because I'm actually okay owning NVIDIA at 120.
Yeah.
Because that's going to lower our collective average to like maybe 120? Or
Yeah,
about 122? What is our average right now on NVIDIA?
Well, 125 on the.
Okay, so we buy these at 120, and then we're going to put us at 122.50, 122.60.
Roundabout, yeah.
And then we can just turn around and sell aggressive cover calls at like 123 and make a shitload of money. Or we could look to roll. That's an option, right? They're like, well, I like it right here. We could look to roll. I got to go to the actual option though. Let's see what that would look like. I'm sure it would pay us quite a bit.
I think so. And then we just have to be right. The only scary part about this is September is usually weak.
It sucks. It's a bad month. And I don't know historically how bad it is during election years though.
Yeah.
So that's the part I don't know. You probably better with that kind of research. But if you want to roll out a month, this could also be very, very lucrative, and you can improve our position. We can go from 120. What is the strike? 120?
Yeah.
Yeah, we can go from a 120 strike to say 115 and bring in another $1,500, take some risk off the table.
So for what he's doing right here, we had a 120 put. Stock's basically at 120 right now, so we can roll. Someone wanted to go deeper on rolling today. Rolling just means you're buying the original contract to close and you're selling a new one. So we would be that 120 put on the right hand side of the screen is worth $1.20 right now. We would be closing that out. The 115 put is paying us $4.38. So 430 minus 120. That difference times 5 is what we keep because we got to close the original, open the new one. But the only reason we're getting paid so much on the new one is because NVIDIA, we were right kind of on the price. I mean, NVIDIA is really not that far off from the strike at 120.
Right. And earlier, I think it was above 120.
Yeah.
So that's something too. Like if you want to stay in the play, you want to milk some premium. If you're hell bent on wanting to own those shares, but you want to get a better price, that's when rolling right now would make sense. You're like, let me take that $500 off the table times 5 contracts. So you would be taking, and if I can keep going here on this thing, it'll show there where it'll release the collateral. So let's just say I'll do it for 310 as an example, just to keep going with this thing. You see how it says we're releasing 2,500 in collateral?
Yeah.
So that's almost as good as getting the money via premium from the standpoint that it's no longer on the table. I prefer to get the premium because that adds to the bottom line that goes to your buying power immediately.
And the reason the collateral is being released is because we're going from 120 to 115. So we need less collateral for the trade.
Correct. Instead of 12,000 a contract, you need 11,500. You take the 500 multiplied times the 5 contracts, that gets you to the 2,500.
Yeah.
So that is something that I would consider And we can put that on now, but I wouldn't do it that. I would try to incorporate the theta decay that's going to hit the contract later. So I do these types of things. Let's say I got to go run errands and stuff. And I'll be like, okay, I'll do this trade, but I'll do it at 335.
Right.
Because at 335, that's about what it would look like if I was doing this after lunch today.
Yep.
And then I'll just let it see if it hits. If it doesn't hit, I'm okay living with the result, or I can monitor it at 1 or 2 in the afternoon. So I'm just kind of giving y'all a little bit of tricks there, because the reason people like to sell options amid is theoretically not supposed to take as much time.
Right.
So
Now, for people that have different brokerages, Robinhood makes this very easy to do. Schwab and Fidelity, they have their own way. If you do them separately on Schwab and Fidelity, like you sell one to open, buy one to close, it is a little tricky to navigate to make sure it's fully done correctly. But on Hood, it kind of just does it at the same time.
Yeah. So what are your thoughts, I mean, because ultimately this is your play. I mean, I would not even be in NVIDIA if it wasn't for you. So what do you want to do? Do you just want to take the win? Like where are you at with this thing? Because you had the conversation with Kris Patel. You did the live earnings call in NVIDIA. What are your thoughts here?
Yeah, I want to take the win. I mean, just because September, I think is going to be a little tough. And if we get NVIDIA come down to like 115 in September, just because the market falls 2%, then selling $100 puts would be amazing.
So then what you're saying is just close it out. Let's see if it dips, and then we can open up a fresh batch of cash secured puts if you want.
Yeah, pretty much. Those are my thoughts. Now, we don't have to close it out literally right now. I mean, if we want to, we can. But
yeah, I mean, we're gonna fucking fight over $100 later. It's like I just say we just do it and call it good. And it's not happening right this second, but we'll see what happens, right? Because I mean, NVIDIA is tanking a little bit. It would have to maybe go up to like 119.10 for that to trigger, but it's out there. And then theta decay, we can catch it that way. Yeah. So there's that. What else do we got going on?
Let's go to Robinhood. What do we got going on in the hood? You convinced me to sell some calls, and you were right about that. And it's working out.
Yeah, so we're about even on the shares, up a little bit, which I'm okay with. And again, this is one where we bought at a pretty hefty price, in my opinion, right?
Yeah.
So then I was like, I feel like we can't afford to just sit on these shares and not collect premium, because we got to keep lowering the adjusted cost basis. So we have these for sale on 9/13 at $22. We picked up, I don't know why it's not showing it. We picked up, is that it right there?
2100.
Yeah, we picked up 2100.
So do we have any puts open on Hood?
Nothing.
I think we should.
I'm hoping you would be excited about doing that, or do you have a price target?
Yeah, no, let's look at premiums. Let's see what we have going into. I mean, 1850 is not a horrible price for me, especially if we get paid well. Our adjusted would be like 17.
So do you want to do it to where we just write out all the volatility of the month and go all the way over here? Or do you want to manage these weekly?
Yeah, I think we do a monthly one.
Okay.
So we're betting on September volatility to the downside. So we know things will get a little choppy.
Yeah, so there's not a lot of customers here yet for some reason. Volatility, it's not horrible here yet. Yeah, I mean, it's not the worst thing, dude. I mean, and I don't mind building this position. Like I am okay building this position. How big is it right now?
5,000 shares.
Yeah, I don't mind building this position to like 10 to 15, maybe even 20 in the right circumstances.
Me either. Because
this thing's dude, Robinhood's a monster. Like it's everything that I want SoFi to become, if that makes sense. And then I know that theoretically SoFi has like more levers and all that stuff, but if you wanted like compare tit for tat, and I'm not data driven invest things where I don't fucking look at all these little things, but I just feel like on the things that Robinhood is executing on versus on the things that SoFi is executing on, these guys are just doing it a little bit more on their metrics. And they're and I also feel that SoFi like stunted their growth on purpose because they were bracing for a harder landing, if you will.
Yeah.
So they kind of like, hey, we want to grow, but we want to grow responsibly. And the market really just didn't like that. And then I also think that one thing that really, really hurt SoFi is this convertible deal, whatever you want to call it, the convertible note. Because it was so fucking confusing. YouTubers were talking about it for like a month, trying to make sense of it. And and the one thing that I can tell y'all with 100% certainty is the stock market does not like uncertainty. And there was a lot of uncertainty with that convertible note because you have data-driven investing, you have Tanner, you have Tevis, you probably talked about it. You had Uncle Bruce. There was so many people talking about it, the stock goat guy. And it's like they were all saying something slightly different. That tells me that it was very hard to understand. So I think that SoFi fell out of favor a little bit because they did something that just wasn't very black and white. And even when Anthony Noto went on CNBC, I was like, I still don't know what you did exactly.
Right.
Me as an investor.
Yeah, and I think let's look at the put premiums. I think we can let's sell 25 instead of 50 today because Bitcoin's tanking. That might get us a better price on Monday. But they're going to put up 40% growth in Q3 again, in my opinion, which means like I just think if we're not in a recession, this thing's going to spike. Bitcoin's going to have a little bit of fun. I don't think Q3 is going to be good. So we're probably buying these puts a little or selling them a little bit for less than what we could achieve. So let's only do 25. And then I think we finish it with 75 puts next week if we get a real 3% decline.
Yeah. So what Amit is saying, guys, is we're scaling into the position.
Yeah.
Like if you have it in your budget to sell, let's say 100 puts, you don't have to do all 100 at one time. Especially if you think that you can get a better price, but let's just say it goes up, we can at least lock in this money right now. And I do that all the time. Like, dude, I don't always just do 200 puts, 200 because that's the maximum that Robinhood allows you if you're getting more than $25 a contract. But I do this stuff often because you don't know, right? And if like, okay, I'm wrong directionally, fantastic. I could at least get more money for, loading the boat, so to speak.
So this is 1250 divided by 46,250. That is a 2.7% return in about less than a month.
Yeah.
And we get to buy Robinhood at 18.5, but we're getting paid 50 cents. So our cost basis would be 18 if we have to buy.
Yeah. So we have that pending. We've got NVDA pending that I don't know what's going on here with NVIDIA. So we'll see what happens. I think NVIDIA might be tanking if it went that high.
Is NVIDIA tanking? Where's NVIDIA right now? If it is, then maybe we just roll the 120 to 115 and get some more money. Yeah, 118 right now. That's down a little bit.
Yeah, so we'll see. We got the rest of the show. We'll figure it out. So there's that one. Anything else that stands out? Here's another one. You want to tell the audience what happened here?
Yeah, so Snowflake, we sold 118 puts last week. Snowflake tanks after earnings, recovering a little bit. We got paid to roll it down to 117 and extend another month on the contract.
And we got 681 for doing that, and we took $100 off the collateral requirement. And that's why you see a lot of premiums there, because the loss on the initial cash secured put is baked into this market value right there.
Right.
Essentially. So now we need Snowflake to kind of cooperate a little bit. You were talking with Kris, and I stepped out because I was dealing with the dog. What did he say about Snowflake? Because I heard the topic in the background.
He said Databricks is eating their lunch, and he's right about that. From a private, they're a private company that does what Snowflake does, but they don't have to worry about like public shareholders.
Mm-hmm.
So it's very competitive. I came across an interview with the CEO over the past week, like a podcast, like an hour-long podcast. It's just the most uncharismatic dude you could imagine. Like, it's really bad, dude. I do not trust them at all. Even though I think they're oversold, I just don't trust them. And I think they're becoming commoditized. They're not profitable. Stock-based comp is too much. So it was a money grab for us. And I think falling 20% after that earnings, after already being down 30%, is a little aggressive. But, I think we end the year closer to 120 on Snowflake, and we get out of the position easily.
Yeah. Yeah. So I don't think we have to do anything there. We've already done it.
Yeah.
The other one is that pertains to us.
Maybe CrowdStrike. We haven't talked about that one. Or let's do TSLL. Yeah.
We'll do this one. And TSL is a big one, dude. So that one's going to require a little time. So CrowdStrike, I got in early, right? So I got in at 283 when I first started this little program. Because I'm early, dude. I like to do it early. So
you bought it the day July 19th happened. Yep.
Yeah. So I sold puts at 270, closed those puts. I made a quick $600-700. And then I was like, I want to get in. And I pulled the trigger early, like the American Pie dude. And Amit, you probably don't know what I'm talking about. Have you seen the movie American Pie, bro? I know your history with movies is not very good.
I know the movie. I haven't watched it. I think I watched parts of it a long time ago.
So this dude has like the hottest freaking chick ever. Help me out in the chat. Her name's Shannon something. and Jason Biggs is the guy, and he has her on his bed ready to do the dirty, and this dude like blows the load twice, bro, prematurely before anything happens.
Interesting.
And he's kind of like me with buying stocks early.
Oh yeah, I remember this movie. This is old. Yeah. There you go.
Yeah, dude, this lady, Shannon, whatever, what's her name? Elizabeth. Thank you, dude. Beautiful woman, and a real good poker player too. Something y'all might not know about her. She's a really, really good poker player. But anyway, she was there. I think her name was Nadia, if I'm not mistaken, in the movie. She was like this foreign exchange student or whatever. And he gets her on the bed, bro. She's showing the knockers, the whole deal. And then this dude just fucking loads up on Palantir at $25 a month.
Oh my God. Okay, so we have a good average at 246. Do we have any covered calls? I think we should sell some calls on it.
Yeah, I've already got. We're good.
Okay.
We're good on CrowdStrike. We've got covered calls in the distance in October at 265 that are already under, or 260 that are already underwater.
And if those get sold, it's not that big of a deal, right? It's whatever.
I'll probably keep defending them all the way to January. I would like to go from 260 to maybe like 275 if I can do so for a credit, not a debit. But it's not anything that we have to address for the next couple of weeks.
Yeah.
Because it's zero, less than zero emotional attachment to CrowdStrike. Now, the one thing that I will tell you though is I like to research people, right? Because it's like management's, it's my M's, right? Like the management, the mode, the market cap, the market sentiment, or the TAM, the total addressable market, the market sentiment, and are they making money, right? Do they have a path to profitability, or how much money are they making? Those are the M's that I study when I study the companies. And right now I'm on management with CrowdStrike. And dude, I gotta tell you, dude, I'm super impressed with this dude named George Kurtz. I didn't know much about him until a couple of 2 or 3 weeks ago. But dude, this dude is either like the best salesman that I've come across in a long time, or he's just like he's uber confident. And
well, I think the reason he's been so confident is because before this whole July incident, it was the most expensive name in software because they put up such amazing numbers. And so this thing humbled him for sure, because this was a big one. But I'm looking at their guidance and they're not changing their numbers. I know people are saying, well, you don't know exactly what's going to happen in 2025. I mean, maybe, dude. But like they said, hey, it's going to be $100 million hit. They're working with customers. On the earnings call yesterday, he's basically calling out the competitors, saying that they're spewing propaganda about what's going on with CrowdStrike, and that so it's just I don't think it's going back to 400 anytime soon. I also don't think it's going back to 150. And so that's where I think that, we're in a decent range for CrowdStrike.
Yeah, I agree. And I'm real proud here that we didn't go ape shit either on buying too many shares.
Yeah.
Because this is substantial. I'm looking at it on a daily, but it's also like, if it goes to 200, I'm actually excited. If it goes to 300, I'm kind of indifferent.
Yeah, because the other thing is cybersecurity. You and me, I think, got exposed to it this year as a real industry. The TAM for it, it's not like I was listening to an analyst last night that says if you're an organization, you're cutting spend, this is the one thing you cannot sacrifice. You just can't.
It's a very sticky SaaS model, right? So what is it? SaaS, right? Software as a service. Is that what they call it? I just tried to sound smart there, and I almost bit you in the ass.
Oh, I do that for 2 hours every day, dude. That's join the club. All right, TSLL. What do we have on this?
We went crazy on this one a minute. Oh, that's a wrong Tesla. Well, you can talk about that one. We had that covered call at 225, holding strong, baby, for January. You got the leaps.
Dude, you were underwater on that call for a long time.
And then just patient, baby. Just patient.
That's patience. There you go.
Thanks to robo-taxi postponement. That's what saved me there. Elon did me a solid, bro.
That's actually hilarious. Did Elon really did you a solid? Right?
He did me a fucking solid. So now I started going ham on TSLL. It's a 2x leverage play on Tesla. And the reason that I started doing a ham, shout out to Matthew, one of my members, he said that TSLL, if you really study the fund and the way that it's set up, it's not as susceptible to NAV erosion as TSLY because they don't pay a dividend.
Yeah. And NAV erosion is net asset value erosion, guys.
So I was like, okay, cool. Didn't really know what that meant, to be honest with you. And I was like, oh, fuck it. I'm going to use it anyway because the premiums are great and it's a leverage play on Tesla. And it's just that simple. So let's look at the whole position. So there's 1,000 shares at 942. So we're underwater slightly on the shares.
10,000 shares at 942.
Yeah. So it's a substantial position. But look at this bad boy here. Look at that collateral limit.
733 on puts.
On puts. So let's talk about them. So we got shares for sale at 1150 on 927. We got 10,000 shares. We've got 50 or 5,000 shares for sale at 1050, but we don't own 15,000 shares. It's because we have a long calls here that I'm doing the poor man cover call campaign on. So that's how that works. And
Right.
then we have the puts. So these are all for January. So 600 of them at 773 and 400 of them at 673 a minute. How do you feel?
I like it. I think if going into the 10-10 event, if we're bullish Tesla, this is the best way to get exposure to it. And unless they collapse on the 10-10 event, which I could see them having a bad event, I don't think the stock goes back to 130. Then I think we end up doing okay.
So remember I showed $101,000 or whatever in premiums for TSO. This is where they're at. So you got to do 773 and we got 156. You follow me? So that break even is pretty sexy at about 620.
Right.
And then if you go back over here to the 5 or the 673s, I've got, where's TSLL? Help me out. So these guys here was very, very conservative. This is where a lot of the SoFi money went, guys. I sold 400 of these total, and it was in 2 batches. I got 20,800 on some and 21,400 on the other 400. So this took less capital than SoFi, and then I only paid 53 cents a share to close them out at $7. So it was just a win all the way around because it took less capital and I collected more premiums.
Right.
So that's, hey baby. So that's essentially where all of the SoFi money went. So how do you feel about it?
I feel good because it's January 2025. I think we have a bull run at the end of the year. I think Tesla at least closes the end of the year at 230. I think we can close those puts early if we want for a decent profit. And I think as long as on 10-10, it's not delayed or Elon doesn't like absolutely shit the bed, which I would imagine they don't, I think we win. And I think those puts end up printing pretty well.
Agreed. One other position that we can talk about, and then after that, I'm going to ask you for some help, is BITX.
Yep.
This is a leverage play on Bitcoin 2 times over. And I just found out literally today because they paid a dividend.
How much did you get?
1250 something.
Wow. Not bad. On
No.
2,000 shares?
Yeah, I was like, I didn't know that was coming. Well, thank you. You know what I mean? Half the dog. No. Quarter the dog. No, so it was cool. So we have a 2653 average. I think it's a bit aggressive personally, but it's also 1% of the portfolio, keeping that in mind, right? In perspective. But we also have the cash secured puts in the distance at 24. And then we've got those shares for sale at 32. So effectively we're running a covered strangle on this campaign. And I feel really, really good about it. I actually would be okay with more exposure to
I mean, it all comes down to, do we think Bitcoin's going to have a bull run? And if it's not, this position is wrong. If it is, this position is going to make a lot of money. So I'm not opposed to buying another 2,000 shares and doing another 20 covered calls. If we want to add to that position. The thing about Bitcoin right now, so we saw that flush to 57 on Monday, which was super weird, but that happened. Bitcoin right now is at 58. It looks like this 57, 58 range has been the bottom for the past couple of months, outside of that one wick to 49,000 on August 5th. So I think this is the cheapest we get BITX, unless Bitcoin just collapses. But, we can't really predict that.
No, for sure. So where is BITX? Here we go. So I'm in the camp of doubling our position.
Okay.
I'm in the camp of doubling our position and doubling this position. So like doubling the entire position and doubling this position. So in other words, I want to buy the shares. I want to sell the 32 calls. and then I want to sell 20 more cash secured puts, and then we're done with this position. We don't even have to talk about it till December.
Yeah, that's fair.
And then we're either wrong or we're right. I mean, what else is there? But the beautiful thing is we can roll the shit out a year if we need to on the cash secured puts. We don't have to take ownership of any more shares at that point. And then if this thing runs to like 40, there's like less than zero emotional attachment to these guys. You can take the damn shares at 40. I'm not going to be like, oh my God, I left all this money on the table and all this shit that people like to punish themselves for. Like, this is just, if you look at the amount of capital that we're tying up versus the potential realized return, I like the risk reward situation here because I am anticipating a pretty massive bull run on Bitcoin. I'm in this crazy camp that Bitcoin's going to go to 6 figures by the end of the year.
So the only question now is, do we think September Bitcoin's even more volatile and the premiums get better, and that's why we wait?
So then maybe what we could do is buy 1,000 shares now, and then if it tanks, we can get a better price. Because earlier you had said you don't think we're going to get a better price than this.
Yeah, I don't think Bitcoin's going below 55 unless September is just horrible. But if not, then yeah, I think scaling into it makes sense.
So what do you think? Buy 1,000 shares and then sell 10 puts?
Yeah.
And then we can kind of leave it on the table for later.
Yeah.
I'm cool with that. So we go here, review. Yeah. And I hope I did this right.
Yep, there we go. 25.50.
So there's that.
We're average down, I think, because we bought the initial ones at 26 or something.
I'm not even sure, dude. So this guy right here. So yeah, so we're at 26.21 on 3,000 shares now, or a little. Because the extras, because they did an automatic what's it called, a drip dividend reinvestment plan or some shit like that.
Oh, they did that first. Okay,
is that what that's called? I might have screwed up that acronym, guys. Sorry about that. But essentially, they take your dividend, they buy shares without your permission, because there's little shit that you need to put on there that says you don't want that to happen. And I didn't want that to happen, but I mean, I'm not going to go fucking sell 47 shares or whatever I got either. You know what I mean? Yeah. So it's really going to be hard on my OCD right now, guys, to have that weird number there. But so then now I'd like to match these guys up.
So we're going to sell 10 more calls at 30. Do we want to increase? No, we want to do same 32. Yeah. We can still do 32.
Yeah, because this is more of it's not even so much capital appreciation. It's more a hedge to the downside. Because if you think that you overpaid for the shares, well, you can get a bigger premium by selling a more aggressive covered call, and that's your protection to the downside. It's capping your upside, but I'd rather do that because it's a safer play versus getting less and trying to get more capital appreciation over here at like $40.
And it's lowering our cost basis at the end of the day.
Correct. So I'd like and it's 10 contracts. Is that right?
Yeah. So we would get paid $4,000. Which is not bad, dude.
Well, it might get a little more because I'm gonna try to do it at $5.
Let's see if $5,000 fills. There you go.
Let's quickly get on a little more probably. So there's that. I know we don't talk about this one much, but dude, it's actually one of my favorite positions because it's one of the few positions that doesn't cause me any stress, and that's American Airlines. So there's 5,000 shares at 987, and again earlier we said that Kris likes the cruise lines, and I like American Airlines for more alpha at these levels. But again, it's just Kris is much better at this shit than I am as far as like picking spots and timing. Don't listen to anything I'm fucking saying. The dude, he's your guy. You know what I mean? But I just saw an asymmetrical risk here when American Airlines was in this 950, 960 range. I didn't really jump on it till it was right here, 987. And then I sold the covered calls at 11 for 8, I guess today. They expired today. And then I've got 50 more cash secured puts at 10.50. And I've got an additional 50 cash secured puts at 10. And admit these cash secured puts have been printing steady 3.5% per month and not causing very much stress at all. And I'm also getting capital appreciation that I wasn't really counting on. So that's been like an absolute bonus on American Airlines so far.
Do we want to add to this position, or you like it where it is?
So I'm asking you because we don't talk about it much. And I know that you're not like super excited about it, but I feel like on a couple of podcasts ago, we rolled the tape. I told you this is one of the easiest stocks to wheel.
I mean, look,
at those
I,
levels.
I don't think American Airlines is going out of business. I think travel has increased over the summer. I think if anything, the stock should be within the $9 to $12 range over the next couple months. So I don't have any issue just collecting more premium on it. Which means maybe we do some more puts, scale into some more puts on it.
I mean, it's up a lot
It's up today.
Yeah, it's up. I just want to put it on our radar because if there's a dip, I would like to add to these guys right here.
Your 10.5 puts. Where's that? It's at 11 right now.
1070, I think.
Okay, gotcha.
And it was, I mean, if you look a week ago, this thing's gone on a run of 50 cents.
Yeah.
But I'm just saying I'm always looking for places to quote unquote hide money, right? And this feels like a place where I could easily hide $250,000 and feel very comfortable at these levels. And dude, I don't think American Airlines is a hotshot company by any stretch. These companies are money pits, bro. Like they're not.
Yeah, airlines are horrible. They're not. Yeah.
But they're also essential companies.
But why do you think the premiums are so good on American Airlines if it's not that popular?
I don't know. I mean, the implied volatility. We can look at the implied volatility, like on this one right here. I'm not even sure what it is. Probably in the 50s, if I had to guess. Is it 40? No, I mean, that's what makes it good though, because that means that they're not pricing in a really big move.
Yeah.
And that's that's pretty decent, dude. Most wheelers, they like implied volatility in the 30s. I'm dealing with stocks that are shit in the hundreds. You know what I mean? Like this is again sleep easy at night type stuff. I kind of regret that I don't have 10,000 shares of this thing already because I feel like I knew, and I just didn't. I didn't trust my belief enough, if that makes sense.
Yeah.
So I just want to put that one in your radar. Do you have 5 or 10 minutes to, maybe not 10, but 2 or 3 minutes to help me on something I'm navigating?
Yeah. Let's do it. What do you got? Oh, real quick, let's just show them hymns because we didn't show them hymns at all.
This is another one. I watched Tevis's video. Shout out to Tevis, Fundamentals of Investing. Dude, Tevis, I think, is a school teacher, bro. I don't believe that he's in tech. He's really good at just like dumbing things down for us. And he put out a video on his bull case for hymns. And I was like, oh, dude, I could like totally get behind it. It makes sense. Like he's speaking my language. So we sold these. Well, what is it? When did we sell these? 8/27. So what is that? A couple days ago.
3 days ago, yeah.
And they expire 9/20. We picked up 12/67, so 50 cents. How do you feel about it, dude? I like it. I like it. It's going up and to the right as far as all the metrics go. Issue,
I like it too.
An issue that I do have, and I think I've already mentioned it before, is I think that their CEO is a little bit very political, a little too Elon Musky, Alan Carpy without the clout.
Yeah.
So I don't know if that's detrimental or how detrimental that could be for the company.
I think the risk has been mitigated since he had his last outburst, but that is something that we have to keep in mind. If he decides to start talking on Twitter one day randomly, that could hurt. So
yeah.
But I like it, dude. If our cost basis is 13.50, I think we're going to be good on these shares. I don't think we get assigned. If we do get assigned, I don't mind owning it at 14 and then building out a 5,000 share position at the 11-12 range at all. I think that's
yes. So I guess my question is, why do we only have 25 contracts? Because this is a trade that now, mind you, it was probably in the $15 range when we first sold them.
Yeah.
But now it's like, it's not bad. I feel like, how do you feel about it at 14? I like it at 14 with a break even of 13.50, and the market's actually willing to give us a little bit more right now.
I don't mind it, dude. I don't mind. If we are solid on the thesis and we have to end up buying 5,000 shares at 14, 13.50 average, I don't hate that.
You want to do 25 more contracts to lock in a little bit more money?
Let's see what they do. Do they give us 52?
Update to 55.
They're not gonna give us that. Yeah.
But we can go here. That's the thing about these 5-cent increment. I wouldn't even trade these before because it was so annoying. So we essentially are matching up the other one to get it done right now.
Yeah.
So there we go. So now we've got 50 contracts. I got to update the tracker later. I'm doing it offline now, guys. That way we don't take time doing that. from this segment. I like it, dude. I like everything about it, but I am, as long as we're on the same page, that if the CEO keeps running his mouth a little too much, then it might be a better place to hunt.
Yeah, I think the CEO will be fine. The bigger issue is just this whole GLP is their competition with Ozempic. And like, I think people are freaking out for no reason. It's going to be a massive market. Eli Lilly is going to sell a lot of it, but I think so is Hims. And their core business is not Ozempic. It's everything else but that. And they're growing 65%. Like the financials are just phenomenal. Ozempic's another tailwind.
What's how's their debt situation? Because I haven't dug at all.
I don't think they have debt. If they do have debt, it's in the low hundreds of millions. It is not a lot of debt, and it's not stopping them from being profitable. So it's a killer. And they're growing 60. It's hard to grow 65% year over year in anything, and they're doing it profitably. And they're only worth $3 billion. Like it's not the one I'm the most excited for, but it's also not something I would hate to own in the 11 to 14 range. I think that's fair.
So there's puts on a Robinhood field.
Oh, perfect. Okay.
1850. Two last things. Are we good? How are we on time, guys?
Yeah, no, we're good. We're good.
Okay. Everybody calls it PayPal, right?
It's definitely not as painful anymore.
Not bad, huh?
Not bad. Up 133 grand is not bad.
And then over here on the options.
So you rolled the calls. Yeah, you rolled them. Yeah.
Yeah. So I'm already in January at 75, and then these are the leaps. So these covered calls at some point, PayPal gonna have to slow down a little bit for me. If not, I'm gonna be in a situation because I'm selling covered calls against these leaps right here. So that's the gimme and the gotcha whenever you want to play that game. Because this long call that I bought is probably printing money.
But are you not selling calls on the shares at all?
Yeah, I am selling down. I'm selling calls against these long calls and against the 10,000 shares that we own in this portfolio.
Okay, gotcha.
So this could just be unencumbered. I could close out the contract right now, wipe my fevered brow with 86,000 in profit. But TJ don't want to do that because that's too easy. We want to do the hard thing in life, right? So I sold covered calls against not only the shares, not only the 10,000 shares, I sold it against the 100 leaps, which controls 10,000 shares.
Right.
So now this covered call is an absolute pain in the ass. It's worth 110 grand. So if I wanted to free up the shares right now so that I could close out the long call, I have to give back 55,000 if I just want to do it on the long call, right? Half of that position, 55 grand. So then
you got paid how much premium on those 200 calls?
That was just on the latest roll, but I have to follow it. But it's about right at about 65 grand is what I've gotten. The rest of the money is baked into the rolls.
Got it.
So it's profitable either way. But what I'm saying is what I can't have happen in this situation is where they exercise me.
Right.
Like no matter what happens, I cannot get exercise. So even if I had to bite the bullet and just fucking buy another 10,000 shares outright or buy 100 more long calls to make good, because essentially I could potentially have shares called away from me that I don't have in my possession right now. So that's where the danger is, if you will.
Right.
So how do you feel about PayPal at these levels for me? Did you think that we navigated the waters pretty decently?
I mean, dude, if you have to sell at 75, I don't hate that in January. I think you can roll and navigate it, but I think, you rolled it out, collected even more premium, and it's more than a $500,000 position sitting on a 20% gain, which is not bad.
Dude, this has been just in my mind. It's like a glorified savings account.
Yeah.
Because it hadn't gone anywhere, but the premiums were like, okay. And I was like, if I could find something that I'm like a lot more excited about, I would gladly move the money over. But then I started like watching the videos, that a lot of YouTubers are putting out. Shout out to Roy Crossroads. He puts out a lot of info on PayPal on a daily on Twitter or X. And I watch all the stuff that he puts out. And I'm just like, dude, like the bull case is pretty compelling just from the standpoint that they're buying back the float. Like just that alone was pretty damn exciting. And they're trying to, I think, make their mark again, because I think they got caught between a growth company and a value company. So it's like, what multiple do you assign them? You know what I mean? Because they were also like theoretically losing market share and all that stuff. I like it. I liked it at 50-ish, 55. But I feel like we've been pretty good at building out that position. Last thing I want to talk about, guys, because I got to go do life, is Intel.
Intel's running today, up 10%.
So what exactly are they doing? Are they talking about breaking up a company or some shit? What exactly is going on?
It's some rumor that the company will split up some parts of their business. I think all of it's unconfirmed, but it's bullish, I guess, because it'll unlock more shareholder value if they do that, theoretically. I have no clue.
So I got 20,000 shares at 27 and some change. There's that. Adjusted cost basis is like 25-ish. This was part of our project, but I took it off because, I mean, that would be half the money, right? So it was like and then you were cool on like the first 2,500 shares, and then I went retard mode. So I've got those shares for sale minus the 2,500 that I bought at 20 recently. I've got these shares for sale at 24, and there's a dividend pending that I'll hit September. And then I got a little bit of what I'll tell you over here. I got a little bit of money on these covered calls.
175 times 23. You collected about
24.50.
Okay.
I don't think those are going to come under pressure. If they do, I would gladly take that and roll it a couple of months and go to 25, 26. And at that point, I'm at my adjusted cost basis. If I can get to even at 26, that would be like a net win. And then I probably reassess everything and probably be okay with letting at least half of the shares get called away. That way it could go to a more reasonable position and reallocate those funds into something that has more legs and less uncertainty. That's the thought process. I wanted to get your take on it because you're the one that brought this play initially to the channel.
Yeah, I mean, it is what it is. Now we got to navigate this situation, and it's a little tricky, but I do think Intel below tangible book value, it will come back. Your adjusted cost base is 25. I think in the next 2 years, it'll be 25. I just don't think there's a narrative of growth right now for Intel. That's why the stock's up 10%, because it's been missing a narrative. Today, it finally got a narrative of like, hey, they're going to split this up and blah, 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 blah. And the street's excited. Does it deserve to be up 10% on this news? Probably not, but like that's how the market trades, right? They just need something to get excited for. So I think in the next couple of years, they give you a little bit more excitement, maybe do some share buybacks, etc. Intel's probably back to like $30 in the next couple of years, but it's going to be a slow grind.
Right. Agreed. So it's like, it's one of those things that could that $500,000 do better somewhere else? So I'm thinking if I can position myself to take even a small loss, because right now the loss is still substantial, right?
Right.
And I'm not super bearish on the thesis long term. You know what I mean? That's where I got to just like go do the books, go to the tracker and stuff.
And if you can keep milking it with covered calls for the next couple of months, I mean, you can start collecting a lot of premium here if it just stays flat,
Yeah, no, agreed. Like I was just looking at adding those 25 right now at $24 because I'm leaving money on the table. Like if I go here, I could match these guys up right there. It's 25. I think it's 25 contracts. I mean, even that right there is an extra 525 that I didn't have. So, and it's good for that. I don't know why it hasn't. There it is. So, it brings money. And again, this company's been around for almost 60 years, probably. I think maybe not. Has it been around that long?
It's been around since the 80s, I believe. It's been around for a while.
Yeah. I guess it's just whether or not you believe they can turn it around, right? Is kind of what it comes down to.
Yeah.
NVDA is definitely taking a dump.
Do we roll it instead of closing it?
We got to cancel that. That's not happening. So let's revisit NVIDIA and see what's going on. So how do I do it? So NVIDIA is...
Well, it's not just NVIDIA. The whole market is tanking. So we're getting into the September red on August 30th.
Yeah.
And also we have a 3-day weekend coming up, guys. So people are probably selling before Monday because there's no market open on Monday.
Yeah. So here, an opportune time to roll for me is when your break even is about to be breached. And we're about $1 away from that. So I think that if we just want to have one last thing to to show the roll to somebody on the channel, because this is going to be the difference between $200 or $300 for me, which is not going to really move the needle. I say we roll to the end of the month and we go take a little risk off the table and maybe go from, because we've got to make good on the 235, right? And then maybe go to 115.
Yeah, I don't hate that. That would give us what, $3 a premium, like $13.50.
And then we say, hey, just give me 270 because we got people watching and we got to get the shit done.
Yeah, so if we were to have to buy NVIDIA 115, the actual cost basis would be like 113. I don't hate that. And we can keep rolling it. If it goes to 115, we could roll it to 110 and just play it that way.
There we go. So now it's out of the money. Give me like 2 minutes, baby doll. So I think we're good. So everything got accomplished today. I got to update the tracker. Looks like the market's taking a breather. I love our situation here. There's plenty of money on the sidelines. They're willing to loan us 3.7. We're only using 2.7. We can cover 1.4 initially. So we are not in jeopardy of anything there as far as that goes. Like the market could crash quite a bit before you'd create any stress whatsoever. So I like it, Amit. So what do you think so far, man? Give me a 1 minute of how this whole process has maybe either confirmed your mindset or tweaked your mindset or changed your mindset before we started this project. Like, what have you learned? Because that was my goal when we started this, is I was like, I want to do, I thought we were only going to do like 10 episodes, to be honest with you. And I want those episodes to leave a mark, hopefully on a couple of people from the audience and on the mid, to be like, hey, this is something that if I can get a hold of some money, this is something that I can legit freaking do on top of building my brand, building the channel, and all of these other, you have probably 3 or 4 sources of income now that is all derivatives of your channel.
Yeah.
But your mainstream of income could be, selling puts and calls in conjunction, buying, holding, and hoping on Palantir and stuff like that. So that was my goal for you, is I wanted to hopefully in those 10 episodes give you an insight into the shit that I deal with on a daily basis. It's obviously turned into, this is like the most popular segment even on my channel, dude, because Alex clips this shit and it gets more views than anything.
Oh, people love you, dude. People love you every Friday.
So, so what are your thoughts, man? I just want to make sure that I'm doing my best to leave a positive impression on you.
Yeah, dude, this has changed my life, 100%. And I'm sure people in the chat will agree with it. If you want the tracker, email amit@dailypalantir.com and we'll email out the trackers that TJ uses. But this has been, you have taught me how to scale into a position and how to get paid to actually buy a stock. And so we were talking about it yesterday on the market open when NVIDIA was down 6%. And everything I was talking about was from what I learned from you, which is like, hey guys, if you want it at 105, you could still get paid 1% on your money. And if you have to buy it at 105, which your cost base becomes 103 because you're getting paid $2. It's not, just that psychology of how to think of initiating position and then making sure your shares are acting like little soldiers and they're actually paying their rent inside of the house. I think that is a game-changing philosophy. And there's not a lot of people talk about it on YouTube, right? A lot of it is just what stock do you buy and hope it goes up. Not a lot of it is how do you make a business out of your cash, whether it's 10 grand or 7 million. You can collect a return on your money, which is what business is. How do you put money in to get some money off of it? I think it's life-changing.
Yeah, I agree, man, because it's, like in life, you always want to try to figure out how to leave your mark. And I don't have a big channel yet. I aspire to get there, but my wife didn't think I'm very likable. No, she doesn't say that. But she's like, it just takes.
We gotta use Gavin. We gotta use the dog to get.
Well, I'm very like, I don't have a lot of foo-foo, right? It's just I sell puts, I sell calls, I collect premium. And that's predominantly the strategy. Now I've introduced buying leads, the poor man covered call. Like, it's essentially been a one-trick pony. It's just a very profitable trick.
Yep.
So it's a very niche product that I'm offering, if that makes sense.
Well, the dog is now the star of the show. Even on your channel, the dog is going to be the star of the show.
But brother, I appreciate each and every one of you guys, man. You guys helped me to become a better wheeler and a better person. Like I said last time, I go back and I watch these podcasts and I try to give you guys information based on the stuff that I get from the chat as well. You want to do the word of the day, man? Because I got to run.
Yeah, and please make sure to follow TJ on Twitter, guys. His Twitter is in the chat. Word of the day. Okay, word of the day is I got to share the screen. TJ, you can hear me, right?
Yes.
Okay, the Mac's being a little weird. I'm just okay, here it is. Now it's better. I think I have too many tabs open as well. All right, word of the day is opsimath. I don't think anyone's ever heard this word before.
Yeah.
Opsimath is a person who begins to learn late in life. Interesting. Well,
I feel like that. I feel like I'm definitely one of those folks. I was obsessed with making money, dude. I did it. If you ever want to like really dig into my soul, if you'll allow me, I put out about a 3 or 4 minute video on a real big perspective that I got whenever my daughter passed, and it was TJ being real. It was like I used to chase money. Like no matter what I did, I was just gonna go make fucking money, and everything else was gonna be on the back burner. And then I was going to figure out how to be a husband, dad, all that stuff. But then something happened in my life and I didn't have that chance. So now it's like, if I can't make a lot of money while enjoying balance, I'm not interested in doing it, because it's very important to control where you put your time. And because time is the most precious commodity, right? At the end of the day, it's a very finite number. You can't make any more of it. And I feel like I was very opsimath, or however you want to say it, because I didn't learn that until very late in life. I'm 49 years old now, and I feel like I didn't really learn that till I was like 44 when my daughter passed. Right. I wish I would have learned that shit at like 34 or 24. There's going to be plenty of time to go make money, guys. Make sure that you make a lot of memories along the way, because at the end of the day, it's at your funeral, they're only going to be talking about the memories that they shared with you. They're not going to be like, oh my God, you remember that time TJ bought Intel and it worked out, or it didn't work out? I mean, that maybe a side conversation, but that's not what the funeral is going to be about. It's going to be about what memories do you share with them. Or talk about Vegas when I'm like, hey, who the hell knows about Palantir? Who knows about SoFi? There you go. That was my bull case.
That was the fun. We were at the craps table. There were 10 people there, and he went up to all 10 people. He's like, do you know about Palantir? They were like, no. He's like, do you know about SoFi? One of them was like, yeah, I know about SoFi. TJ was like, see, Palantir's got the marketing.
Much love, man. Appreciate you. Mick, keep doing your thing, brother.
Much love, TJ. Thank you so much for coming on every week. We'll see you next week, as YouTube's here in the chat. And thank you for teaching us, man. We really appreciate it.
Appreciate you guys. Have a good one, guys. God bless you guys.
Have a good one. Bye. All right, folks. Nice show today. We had Kris, we had TJ. Hopefully we got a lot of perspectives in on the show. It does feel like we're getting a little bit of a Friday collapse, which is fair. It's the last day of August. And it's also getting into September, and we don't have a market open on Monday, which really hurts me, because it sucks to not do the market open. I'll still probably go live on Monday, and maybe we'll just get someone on and just talk later in the day, even if we don't do a market open stream. But S&P basically flat on the day. Looks like people are hoarding some money before Monday happens. September is going to be volatile. The macro data we got this morning was great. The macro data we got this week was great. NVIDIA earnings was great. I think everything you needed to line up has been good. The only thing I'm concerned about now is September 6th. That is going to be the jobs report, Palantir at 31. If that jobs report is good, I think September's still volatile, but we move forward. If that jobs report is bad, I think we get a nice, 5-6% downturn. But I think that's a dip you buy, unless that jobs report gives you such definitive evidence that things are bad. And by the way, I don't think the jobs report is going to be that bad, because jobless claims that we're seeing every week is pretty good. So we shouldn't have massive unemployment if the jobless claims that we're seeing are not rapidly increasing as well. Doug says laundromats are open 365 days a year. Well, yes, shout out to Doug, who has his own laundromat now, took some nice gains from the market, put it into a cash flowing business. And if stocks, take a little bit of a weak turn in September, hopefully the broader economy, like laundromats, don't take a weak turn, and that just ends up being a little bit of a stock market month of pain versus a broader economy month of pain. So I think we're going to be okay, dude. I think it'll be good, but we got to see what happens in September. We got through the worst part of Q2 which was all these, I mean, CrowdStrike earnings, right? People were scared about that. We got through that. That one's done. NVIDIA earnings, people were very scared about that. That one's done now. Down 6% is really nothing. CrowdStrike up 2% of the day. And then the S&P is basically at all-time highs after we got through the carry-in trade in August. So I think from a broader economic perspective, things are good. Macro data is good. Inflation data is good. Jobs data is good. Earnings are good. I think you'll have a lot of people, if we get a September volatile month, yelling that things are falling. I just don't know if companies are putting up the numbers how you justify a massive recession. And they won't put up numbers if we have more jobs start to fall off. But that data is just not what we're seeing yet. Some people are also saying, oh, well, the data's cooked. Like, oh, they're cooking the data before the election. Quite frankly, dude, just honestly, I don't care. Like, my plan is to exit a decent amount in the end of the year, early 2025. If they're cooking the data, like, it goes back to that quote. Like, if the party's going to happen, you're either like, the party's going to happen no matter what. You either want to be in the party or you want to be looking from outside the party. If the party's happening, if they're cooking the data, I'd rather make sure I'm invested in equities that are going to go up on the cooked data than complain about the data's being cooked. Because like, you could complain about it, or you could just be participating in the cooking of the data and cook up your stocks as well. That's how I think about it. I'm like, you could take the alternative approach, which is, oh, the data is so cooked that one day the chickens are going to come home to roost and we're going to find out everything is fake and then everything's going to collapse. I'm hesitant to take that approach because we had a jobs revision of 818,000, meaning we saw the cooking of the data start to unwind 2 weeks ago when the BLS report came out, and the market didn't give a fuck. The market was like, okay, yeah. The market was like, well, we kind of knew that was going to happen. And we moved forward because company earnings is still good. NVIDIA's not cooking their numbers. If you want to say NVIDIA's cooking their numbers, that's a whole different discussion. But $32 billion of revenue for next quarter, that's not cooked. That's real, right? Even if jobs numbers are a little bit cooked. Inflation data as well. Some people are saying, oh, well, inflation looks good because we're getting into election. I actually kind of agree with that. They could be cooking the jobs data. I don't think they're cooking inflation data. Inflation is like, if anything, inflation data is lagging because shelter is 90% of the increase in CPI, and they're not cooking that. And that's, if you thought they were cooking CPI, you would imagine they somehow navigate the shelter part. But energy is coming down, gas prices are down, airline fares are down, used car auto insurance is down. So jobs is the thing that I might agree with is being a bit cooked, even though we got that revision. But I'd rather benefit from that versus get scared of that happening. Doug says this is the way, get your money this year and get out, at least until you can tell which way the winds are blowing. I agree. So let's say all of this economic data we're getting is fake, which again, I think that's hyperbolic, but let's say some of it is being cooked. And that's going to help the broader economy going into the election cycle and to the end of the year. I think that's where you get to take profits. And then in 2025, whether it's Trump or Kamala, as Kris said, Trump's tariffs might be inflationary. Kamala's corporate tax rates might be ridiculous for shareholder returns because corporate profits theoretically would go down a certain percentage point if that money is going to the government. So both of them could have negative impacts. Both of them could also potentially have positive impacts, but you just don't know. And I think that's where you give 2025 some time, a couple months to just see how things are playing out before you get deep into the markets. But I think 2024 at the end of the year is a time to take some profits. And I think if the data is decent enough to take those profits, whether or not the data is fake, at least you have the opportunity to take profits, which is the most important thing. Someone says unemployment rates are climbing. We'll see on September 6th. Yeah, we will. We'll see on September 6th. Jeff says people believe what they want to believe. That's another thing. People believe what they want to believe. And after the BLS revision, it became very obvious to me that, okay, so like we added 800,000 jobs that were never real. So now we're getting rid of them. But the bear said this is the worst thing in the world. Economy's cooked. Yada yada. If you look at it from a different perspective, it's like, well, we're not getting rid of 18,000 jobs. We just never hired 818,000 jobs. So it's bad, but it's not end of the world bad. And I think that's the divergence here between the bears and the bulls. They think every piece of consumer data that is coming out, if Dollar General says consumer, blah, 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 it's end of the world. Whereas the bulls are like, yeah, that's not amazing, but to sell off the broader market because you think this piece of data affects every single other good piece of data, that's where the disagreement is. And I think we will see in the next couple of weeks, especially on September 6th, which side is more accurate. And maybe the bears are more accurate. Maybe unemployment is going up that much. I kind of think it's not, but we'll find out on September 6th. What happened to MongoDB? Where is Mongo? MDB Let's see that one right now. MongoDB, that was up 14% on the day. Oh, it's up 15%. Yeah. So Mongo's still doing well, even though we're getting a little bit of a sell-off. Mongo, they beat on EPS and revenue, and they raised guidance. Now, remember, the stock was down 50% year to date, so that they probably had nowhere to go but up, and they had a good quarter, and that's why it's up right now. So that's why Mongo is getting some momentum. For the wheel tracker, again, guys, it's amit@dailypalantir.com. That's the email. So if you want the wheel tracker that TJ used, please email me right there. Ja says, I just joined. I would love it if Amit said hi. Ja, thank you for joining, and hello to you. I hope you're having a good day. Also, shout out to Loop for a while for becoming a channel member. Appreciate that, Loop. Thank you for becoming a channel member, and thank you all for being here. Doug says, well, the market went up in the initial jobs report, and you don't think the market should revise back down when the number gets revised? Well, I guess it depends on if the revision is as aggressive as the market thinks it needs to be. I mean, this comes back to it was priced in, right? The market thought we would lose 1 million jobs. We lost 818,000, and you got to be humble enough to realize, well, if the market prices it in and moves on, then it is what it is. The other thing here that's also really important, whether or not you believe the data is cooked from like the administration or whatever, Jay Powell, who at least to an extent we can say he's apolitical with Bostic and Goolsbee, they said the labor market's in a tough situation. They made that very clear to us. So they are opportunistically saying we will likely cut rates to save the labor market. The question is, which is why September 6th matters more than NVIDIA, how bad is the labor market? Like, really, how bad is it? Because if the labor market's just absolutely disgusting, then rate cuts aren't going to do anything. And then I was wrong. And then all the bulls were wrong. And we're headed into a recession. It's just that simple. If the labor market is that bad, we are headed into a recession. And NVIDIA will crap the bed. Google will crap the bed. Even though the Mag 7 are theoretically recession proof, the market's not going to pay a 35 PE for Microsoft in a recession. Like, they're just not. But I also think people don't understand. The reason I don't think that's going to happen is because when I say the word recession, I think we become desensitized to that word recession. Like, the last real recession we had was 2020, even though based on unemployment, the stock market recovered, but also people got their jobs back within a year, right? Because like we stopped the lockdowns and stuff. So I would say before that, you're looking back into the early 2010s. Obviously 2008 was like the real big one. I was young at that time. I was like 12 years old, but I just remember on the news, I would be like downstairs with my dad watching the news, and it was constant panic, constant chaos. Like CNN, Fox, whatever, everyone's talking about a recession. Because when a recession happens, A, the media is harping on that to get a lot of attention. B, it's the only thing that matters. Like, climate change doesn't matter. Transgender people going to different bathrooms doesn't matter. Anything about social issues doesn't matter. Israel-Palestine is not going to matter as much. When we are in a recession and people don't have money and they're losing their jobs, that is the only thing that we care about. I don't see that crazy 180 happening in terms of where we are right now, where the entire media landscape and the entire broader economic system goes into full-on recession mode. And the reason I don't think that happens is because earnings are good. The consumer is still spending at Best Buy, even if they're not spending at Dollar General. And the tech revolution that we're seeing right now is creating more efficiencies. If anything, it's creating more deflation, which is allowing more momentum and allowing more productivity gains. So will we have weaknesses in stocks, and will certain stocks go up and down? Will SoFi get hit here and there after it goes up 5% yesterday? Yeah, that'll happen. But to imagine there is some massive cataclysmic recession to the point where for the next year, I would come on the market open every day and we would talk about how bad things are. Like, could you imagine if we have a recession, every day the market open would just be like how bad things are? All of you guys in the chat, I'm sure a bunch of you would get laid off because that's just the nature of like math, right? People will get laid off. I would probably be struggling with finances. You know, I don't know what would happen to my dad's business. He runs his own business. He would be like, everyone would just be gloomy and doomy about everything for the next year if we legit get into a recession. And the stock market, it wouldn't be like 2020 where interest rates were zero, so asset prices got inflated and there was no risk-free rate of return anywhere else. The stock market would not be that exciting because we're already at 5% rates. So even if rates come down, it's not going to be as risk-free to invest in the market because company earnings will come down. So you could argue Robinhood is theoretically worth $30 in a 0% interest rate environment, or even $40 at the growth rate that they're at right now, which is 40% growth. But if we get into a recession, even if they're growing at 25%, it doesn't matter because you have to ask yourself how much more growth is sustainable given interest rates that are still not at 0, which is what they were in 2020. They're still probably going to be at 2.5 or 3%. I don't see that crazy cataclysmic scenario playing out. CrowdStrike. I'm looking at CrowdStrike. They say guidance, hey, we're going to do $984 million next quarter. Okay, that's a $30 million hit from what they said last quarter. If they're getting into a recession, and I know cybersecurity is still very sticky, but their numbers are still going to get hit a little bit as well. They're not pricing in that type of momentum. Best Buy's not pricing in that type of momentum. NVIDIA is not pricing in that type of momentum. Even Netflix. Netflix is like, hey, yeah, we're going to grow another 5 million subscribers. Like Netflix does not see any weakness in the consumer that's saying that we can't grow. Shopify, people are buying on e-commerce. Amazon, people are still spending. Retail sales was at 800 billion in July. Like I just don't see enough data to make me so afraid and be like, we need to get hedged and defensive. Intel right here at 22 about the broader markets. Also, another thing, there is not a lot of speculation in the markets. There's barely any IPOs. You had some meme stocks in May when Roaring Kitty did his thing. That came and went in like literally a month. I mean, whatever froth was there, that's gone. Most people have rotated into pretty solid names if they had good gains. I would imagine some people taking profits on NVIDIA right now are taking that money and they're putting it into money market funds. Oh, we didn't even check the money market fund update yesterday. Holy crap. Hold on. So we're going to check this live. Oh my goodness. What do you guys think? Increase or decrease? What do you guys think? Increase or decrease? What do you guys think? No one reminded me yesterday. Check that out. But my point is, if money's going back into money market funds, people are still getting return for 5% for not taking a risk. There's just so many ways to make money in this economy that doesn't require massive amounts of risk, which means I don't think there needs to be a massive cataclysmic recession, especially if people are taking profits and just like reserving that money. That's another thing. If you take profits on NVIDIA, put it in a money market fund, you now have more disposable income to be able to then spend on the economy. And we're seeing saving rates match that to an extent for certain groups of people in the country that have had their asset prices inflate. We saw that with the 401k stat the other day by Fidelity, that there's now more 401k millionaires than ever. Okay, money market funds. The answer is that we have had a $20 billion move, $21 billion move to the upside. $6.26 trillion on money market funds. This is the highest it's ever been. For the past 3 weeks, we have now added $140 billion into money market funds. Okay, what does this mean? A, I think this means people are expecting a lot of volatility in September, which is fair because September is September. B, I think people are still hedged against rate cuts because theoretically, if the Fed told you they were cutting rates, then you would immediately start taking some of that money out and deploying it somewhere else. But you probably don't think they're cutting rates as aggressively, which is something we talked about 2 weeks ago. I actually still believe in this. A 25 basis point cut going from 5.5% to 5.25%, it's not enough to get you out of the money market fund, especially if that's where you want to keep your money. If we go down 75 bips and you're at 4.5, is that really enough? I asked on Twitter the other day, like, how much would you need to see the money market fund yield come down for you to get interested in equities? Most people said below 3.5%. So we're probably not getting that until mid next year. Now that will be priced in and people will get out before they see that happen. But still, you would imagine a lot of money still continues to get momentum from that money market fund as well. So yeah, you got boomers tucking it away. But see, again, this to me is a good thing. This is not a bad thing. Obviously we want that money coming into the markets, but if people are just separating some of their hard-earned cash and they're getting a risk-free rate of return on it, I don't see that as recessionary. I see that as people having a lot of common sense and saying, hey, I made a crap ton of money on Palantir or NVIDIA or Tesla this year. I'm going to take that money. I'm going to protect it and I'm just going to let it grow. And then if we do get this horrible recession, I'll buy the dip because I'm going to get great valuations. But if I need to pay off my mortgage, I'm collecting 5% from these money market funds, which is helping me pay off that mortgage for taking a lot less risk, which means I'm not going to default on my mortgage or my credit card bills or, my student loan payments. Like I just think there is enough money and liquidity flowing into the system that is allowing risk on assets to have liquidity, aka Bitcoin, Palantir, et cetera. But it's also not taking away from the momentum of capital preservation, which is what you want to see. And I don't think that's what you see in a recession. In a recession, you see people have no money, no savings, defaulting on everything. I don't see that happening right now. Doug says, I'm buying a short QQQ as a September dump so I can pay my bills. That's also not a horrible idea. Definitely as a hedge. Someone says, why is Dell pumping? So Dell right now, and I'll answer that question. Dell is up 4%. Steve actually texted me during our show. He texted me this paragraph from Dell's earnings call that I haven't listened to yet, but he said, we are also excited about the emerging sovereign AI opportunity, which plays to our strengths given our position with governments around the world. We shipped 3.1 billion of AI servers in Q2. As we exited the quarter, our AI server backlog remains healthy at 3.8 billion. Now, they don't have a lot of operating margins on that 3.8 billion, but Dell, if you don't believe NVIDIA, Dell is saying, hey, we got 4 billion of AI server backlog demand. That's probably why the stock is up right now, 4%. Given the market continues to believe that the AI narrative is real. Did I say it wrong? I said mortgage. I said mortgage. This is worse than capital. I said, guys, you have to save your capital. Mortgage. Interesting. Mortgage. That's what I meant. Toby says we're near at all-time high on the S&P and money market funds increasing. I'll agree. So that's another great point, dude. S&P is at all-time highs, basically. Money market funds have 6.24 trillion. If anything, the bullish argument is, okay, so when that money finally does come into the market, when you get rate cuts, even if it's in 6 months, that's just a lot of money coming in. Now, if you get a little bit of a downturn, that's still money coming in because there's going to be people buying the dip. Like if NVIDIA goes back to 90, dude, I think a lot of that money in money market funds, they're not stupid. They're going to be, well, wait a second. We're getting 5% here. NVIDIA's down 40% after putting up $32 billion in guidance. Yeah, maybe we should take a little bit of a risk here. And some of that money starts flowing in. So I think the sell-off we're seeing right now is general Friday volatility. We've had a great August. We're going to end August green for the month. I think the S&P for the month is going to end, which will continue the streak of an election year being green for August. Yeah, we're going to end 3% up for the month. After going from 560 down to 507, looks like we're going to end at 558 on the month, which is not too bad. IWM for the month is going to end down 2%, which is not horrible because it was down 10% at one point when we had the carry yen trade. And then August, or for QQQ, we're ending up 3% as well, which is not a horrible end to the month of August, ending up 3% on the major indices like the S&P and the NASDAQ. Have we covered why Amazon is running today? I saw this. I don't know why Amazon's up. Amazon's up 2%. Yeah, I don't know. Actually, I have no idea. I don't think they got an upgrade or anything like that. Any news on Amazon? Oh, so we got something. Amazon is going to Anthropic for Alexa revamp. Amazon revamped Alexa due to the release in October will be powered primarily by Anthropic's Claude AI models. Amazon plans to charge $5 to $10 a month for its new remarkable version of Alexa, as it uses powerful generative AI to answer complex queries. So they're having an AI Alexa, essentially. That's why it's pumping. AI Alexa. Amazon also invested in Claude, Anthropic. I think they put like $4 billion into them. So makes sense why they invested now. They're going to be using Alexa. I don't use Alexa, dude. I've never used Alexa. I know some of you guys use it. I don't really care about Alexa. I can't really imagine using it too much. But for the people that use it, if you pay $5-10 a month, you know, maybe it's going to offer some value. Now, I wonder how people are going to think when they have their AI enhanced Siri that's free on the new iPhone and talking to that versus talking to to pay $5 a month to talk to something to give you even better kind of results. Maybe that's worth it. They'll probably get a bunch of people using it. I don't know if they're going to get massive adoption, something like that. But that's good for Amazon. More money a month. Another way to make Prime even more valuable and sell more Alexa products, which is not bad for them. You don't own your own home. When you do, to set up your lights and stuff, you use Alexa. Yeah, that's what a lot of you guys in the chat said, that when you're in your own house, Alexa's kind of controlling a lot of different things. Yeah, that's fair. I mean, I use Siri to set a timer. That's it, which didn't go off this morning, unfortunately. I did set an alarm. I don't know why it didn't go off this morning. I don't know what happened. But outside of that, I am looking forward to seeing what Siri will be like when they actually give it some good AI stuff. Danielle says I have a smart home setup where I use them. Yeah, that makes sense. All right, so that's it for me. Hopefully you guys enjoyed the show. I don't think we're having Palantir Weekly today because we might have Palantir Weekly. I'll confirm on the market close. I'm not sure if we will, but I'll let you guys know on the market close. If not, then I'll be back again on Sunday. Well, wait, can we even do a Sunday show? If we don't have a, yeah, I don't know. I don't know if we're doing a Sunday show. If I guess we're not doing a Sunday because the whole point of Sunday is for futures. This is what happens, dude, when they take down the market. Yeah, so I guess we're not doing a Sunday show this week. Maybe we'll go live and we'll just, and I'll bring a guest on and we'll just talk about the markets. But if not, then damn, dude, this is a long time taking a break, dude. Saturday, Sunday, and then Monday. We'll be back on Tuesday, bro. Tuesday, because there's no market close on Monday either. So most likely we'll stream before. We'll definitely stream on Monday. We'll do something on Monday. But if not, then we'll be back on Tuesday for the market open and keep it going from there. I'm pretty sure we'll stream on Monday. We'll do something on Monday. I'll get a couple guests. Maybe we'll have like a group pod. Maybe we'll do the Steve and Kris podcast that we've been waiting to do. So we'll figure out something. That would be September 3rd. Okay, September is going to be a big month. There's a lot of things that are going on in September. A lot of stuff that I'm doing that I haven't told you guys about in September. So there's going to be some interesting things going on in September. It should be a very exciting month. And you guys are going to find out a lot more details about that in the coming weeks. So September should be fun. And yeah, we'll probably be live on Monday with something, but Tuesday we'll get back to the broader markets. We'll probably go live on Sunday too. We'll do something, dude. We'll do something. We'll figure it out. So that's it. Thank you everybody for being here. We'll still be back on the market close. We'll have Steve on today at like 4 p.m. So we'll get his thoughts deeper on NVIDIA and how he's thinking about the markets. And that'll be it for a crazy August. Hopefully August was good for a lot of you guys, professionally, personally, all that good stuff. If you bought the dip on August 5th, you're probably up nicely on that. And I know a lot of you guys did, which is good. And now we just got to end out this year, dude. We got through NVIDIA. We got through a lot of macro data. We got to get through the jobs report, end out this year. And I think it'll be a really good year. And it'll be strong to get through this crazy 2024, hopefully in a bull run. All right, that's it for me. Thank you, everybody. Appreciate it. And I'll see you guys on the market close. And if not on the market close, we'll be back probably on Sunday or Monday. All right. Bye, everyone. Talk to you later.